CEO David Solomon from the firm's U.S. Financial Services Conference here in New York City. Check out more from that interview on the Bloomberg Terminal and at Bloomberg.com. Carol, you got a smile on your face.
I'm thinking of Bette Davis. Fasten your seatbelts. It's going to be a bumpy night or bumpy ride, like that kind of ominous tone. But I do think about, this is something we have said, Shri, what these big bank CEOs have to say as we get ready for the next round of earnings, as we get ready for the next and last Fed meeting of the year. I mean, you've been covering this sector. When they are so negative, does it usually pan out?
To some extent, yes, because I do think that they use these occasions, these public appearances, to try and signal and flag what is ahead. So they are preparing us for what's ahead. But I'll tell you, and you guys tell me whether this read is right or wrong, or actually what your read is. To me, the most fascinating thing in that interview was David Solomon talking about this idea that it should come as no surprise to anyone that they have to pay people down this year. That is going to happen definitively, while also repeatedly saying in that interview—
Record year?
In the remarks, not necessarily record year,
Okay.
but this idea that there is this massive competition for talent. What's the point of saying that? Is that him signaling that there is still room for tinkering and he could still potentially tweak the compensation pool to make it look better? Or is he telling people who are complaining and whining, if you really want to complain, I'm telling you the pay pool is going down. The market out there is great. You're free to go ahead and find a job out there. I don't know. What do you guys make of it?
I like that sort of cynical view of it, but I do wonder how you explain the distance between what the firm's own economists say versus what the CEO says.
It's interesting that now I'm the cynic in house. I thought that was Carol, so that's unfortunate.
Well, I know. Well, it's
But you have to read between the lines here, Shri.
I will say this, Tim, though. I think David Solomon's always had this posture of being more cautious, even when things are going great. Through the run-up we'd seen in the post-pandemic times, every quarter David Solomon would come out and say, it has been great, we're not certain that that pace can be maintained next quarter. And yet quarter after quarter after quarter, these big banks performed really well, and Goldman Sachs in particular. So I personally, having observed him closely for 4 years, I'm not that surprised that he would strike a more cautious note than his economists. A little surprised that he is going away from the script because he tends to stick to what the economists say and often says, I don't have a crystal ball. But the fact that he was willing to be a little more downbeat was easily explained in everything else he said in the interview. The idea of the pressure on cost, the cost cuts, the commentary he had on the pay pool, that kind of shows you why he would be more cautious.
All right, well, having said that, and speaking of cautious tones, our Sonali Basak also caught up at the conference with the CEO of Bank of America, Brian Moynihan. Great clue in terms of how consumers are feeling as well. So here's what he had to say about inflation and higher rates.
The evidence shows that, yes, the economy is being slowed by the higher interest rates, by the fact that the inflation is eating up more of a person's savings. They need to get that under control. That means higher interest rates, but on the other hand, you're seeing them slow down, which ought to put less price pressure. That means they could slow down. So that's going to be the debate. I think we need a few more months to see whether it's just a trend or not.
All right, of course, that's the Bank of America CEO, Brian Moynihan, who also said that they had to slow down hiring with fewer workers leaving. They're managing headcount, moving investment bankers. They're hiring in private banking. So, yeah. Like, I just wondering what this means. I don't know. You add it up. You cover this space. We will get earnings come January. How do we take this forward?
This tells you all of these executives, all of these senior managers are neck deep in daily, weekly meetings, planning for the year ahead. And what they're seeing, they're not quite thrilled with what's been put in front of them. And that is reflected in their messaging right now.
I don't mean to ask you why the markets are moving, but I'll go the same question that I said to Jess. I mean, it seemed like these comments have a real effect on the way that traders are thinking about sentiment today.
They should, because look at where the comments are coming from. The CEO of Bank of America, one of the largest consumer banking operations in the country. The CEO of Goldman Sachs, the most important Wall Street firm out there. These people have a real pulse for what consumers are doing, what the average American out there is doing, and also what the big institutions and the big companies are doing. If they don't have a view into what the year ahead looks like, or at least the weeks and months ahead, then no one does. And the fact that they are willing to summarize all their conversations and wrap it in this a ball of negativity, I have to assume that plays some role in the market price action.
And then you do have Moynihan saying, you know, consumers still spending more than a year ago, rate of growth in spending, though, starting to slow. And then you do wonder ultimately how they're paying for it, so whether that'll add up. Sri, thank you so much. Really appreciate it. We knew when this event was going on, we wanted to check in with you and see what David Solomon's comments and the others had to say and what it all meant. Sri Natarajan, he's finance reporter at Bloomberg News here in our Interactive Broker studio. KBW Bank Index, by the way, it is down for 4 days in a row, and it's down almost 9% in that time. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another down day for the U.S. stock market and lows of the session right now. Right to the numbers. We'll give you the why in a moment here, but the S&P now down 71 points, a drop of 1.8%. The Dow down 472 points now. That is a decline of 1.4%. NASDAQ down 250, a drop there of 2.2%. The NASDAQ 100 index also down 2.2%. Tech names including Apple and Tesla among the hardest hit right now. We've got Apple down 2.7%, Tesla tumbling 2.2%, Meta Platforms, Meta, the parent of Facebook, down just about 2.7, down right now by 6.7%. 10-year yield 3.52%. We've got spot gold, little changed, up $1.45 the ounce to $17.70. West Texas Intermediate crude down 3.5%, 74.25 a barrel on WTI. Sources tell Bloomberg Apple has scaled back ambitious self-driving plans for its future electric vehicle and postponed the car's target launch date by about a year to 2026. Again, Apple down by 2.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Election Tuesday. Yeah, we've got another one because we're waiting for the decision in that Georgia Senate race. Voters today in Georgia deciding whether to send Senator Raphael Warnock, a Democratic incumbent, back to Washington for a full 6-year term, or instead elect Republican Herschel Walker in the second consecutive runoff election for the seat in less than 2 years. It's something we're following, and so is our Joe Matthew.
Bloomberg Sound On host Joe Matthew is on the ground in Georgia. He joins us from Atlanta. Joe, good to see you. Good to hear you this afternoon. First of all, give us an idea of what things are like there on the ground, because we know that early voting broke records last week.
Yeah, and that's been, a huge part of the storyline here, to be honest with you, which is why the weather today is a second storyline. Both candidates are trying hard to mobilize voters to come out and vote in person if they did not vote early, on some concern that the stories out there that we've all been telling might cause people to stay home. Couple that with a pretty crummy day in the weather department, and you may have a little bit of an issue here. Both of these candidates are trying to get people to the polls for different reasons. Raphael Warnock, who we saw last night at his election eve rally, was begging voters not to be complacent. He said, vote like it's an emergency. Call your ex, have them vote. Just don't stay on the phone too long. Herschel Walker needs to mobilize largely white Republican suburban voters who are less likely to vote early. And he could find himself with a real uphill climb here today. We had lines around the block where I am in front of this library in Atlanta this morning. And we'll see if the lines reemerge after the work day, but it's been pretty quiet the last couple hours.
All right, Joe, you, me, everybody, we've learned our lesson when it comes to polling and whether or not to trust. We've seen how it can lead us astray. Having said that, are there any early indications among the polling out there that tells us how close this race might be? Again,
they've been pretty consistent, to be honest with you. Yeah, well, right now, if you look at the average of polls on Real Clear Politics, they've got Raphael Warnock up by about 4%. Where we've seen a lot of polls, that's within the margin of error in most cases. We did see one poll, though, a couple of weeks ago that had them literally tied. And so that speaks to what could happen here today. A big turnout could create a little more momentum on one side or the other, and we got a call tonight. But if this falls between or under a half percentage point, this goes to a recount. So we're going to be watching this very closely as they start counting early votes at 7 o'clock when the polls close. And we could find ourselves here tomorrow, being perfectly honest, without knowing who won yet. We just can't tell. It's too close.
A runoff and then a recount, Joe. The only people who that's actually good for, in my mind, is people who make money from political advertising. Talk a little bit about the cost associated with this race, because they have just been astronomical.
Yeah, this has been an incredibly expensive race. Advantage Warnock again. He's been outspending Herschel Walker by about 2-1, according to Ad Impact. But his bank account is beating Herschel Walker by about 3-1. So if it did come to that point, yeah, there'd be a lot more money spent. And this does not decide control of the Senate. It does, however, potentially give Democrats control of committees. And if you want to wonk out for a second, that's what this really has to do with. We already know Democrats have a majority in the Senate, but if they can add one more seat, they don't have to worry as much about a guy named Joe Manchin, and the committees can do what they will without a power-sharing agreement with Republicans. And when you're talking about the Senate, that's a big deal. That's where the judicial nominations go. That's where other nominations for executive cabinet positions go. So Democrats really could use breathing room and a little procedural advantage here in maintaining this seat.
Joe, you know what I always love is kind of the color commentary. Like, what's the feel in the state of Georgia now that you're on the ground? Are people excited? Are people talking about one candidate over another? Give us some feel.
There's a lot of excitement. You might even be able to hear people on the other side of the camera here who are chanting, "It's about us." They've got signs up. In some cases, you've got proponents here of ranked choice balloting. Everybody finds a reason to get involved in some cases, but looking at the style and the approach of both campaigns might help to answer that question. You wouldn't really know until you got here and saw them up close how they handle media, for instance. Raphael Warnock did a half dozen events last weekend, countless interviews. Herschel Walker did one major event, and he doesn't like doing interviews unless it's conservative media. So they've been very controlling when it comes to Herschel Walker's schedule, while Raphael Warnock has been blanketing the urban areas, specifically like this one where I am here in Atlanta. And that's what you see when you look around at the sign wars, for instance. There's a lot more Warnock downtown than there is Walker.
What about when you know, and I know you haven't spent time out there, but it's the areas just outside of downtown, right? The suburbs that Herschel Walker really needs to focus on, and the more rural areas as well. What about in those areas, the sentiment?
Well, you really could argue that they both need to. It's pretty clear that this race will be decided. This specific runoff will be decided from here in the suburbs. Everyone knows largely how the inner city is going to vote, whether it's young people, people of color, just more Democratic strongholds. But look, you have to remember, Warnock won by 37,000 votes a month ago. 200,000 voters, I'll give you another number, split the ticket. They vote for the Republican Brian Kemp for governor, but did not vote for Herschel Walker. These guys driving by must love your program, by the way.
Of course they do.
So with that said, of course they do. They're really targeting these 200,000 voters, Republicans and independents for the most part, who Herschel Walker needs to win. And Raphael Warnock probably wouldn't feel bad if they stayed home.
I find, you know, I heard you talking about that earlier, about the split between the governor's race and voting maybe for the Republican there, but not necessarily for Herschel Walker for the Senate. What does that say about the voter? Because, right, it does make a difference. You know, we know the Senate has pretty much been decided already, but every vote counts. And I just wonder what that says about the voter in Georgia. Is it just always much more local versus thinking about what's going on in Washington?
I'm not sure if it's that as much as an issue about candidate quality. Look, if you've got a Republican who voted for Brian Kemp, who voted all the way down the ticket, Republican. Remember, Republicans won every statewide office in Georgia a month ago, except this one. That says something about this race. And, you know, Herschel Walker has been besieged by tough headlines through this entire campaign, scandals involving former relationships, women who he supposedly forced to have an abortion, we're told. This stuff created a lot of noise, and it's a big reason why they have not had Herschel Walker out in the public to the extent that Senator Warnock has been. So there are some unique contours to this race that you're not going to find anywhere else.
What about when it comes to other people coming in and campaigning on behalf of these politicians? We've seen the way, and we talked to Jody Schneider about this yesterday, the way that even Brian Kemp went all in on you know, pushing the Republican message, but fell short of actually mentioning Herschel Walker. On the other hand, you have some big, high-profile people coming to the state to campaign on behalf of Raphael Warnock. What's the situation there?
Yeah, it's been a very popular place to be. Barack Obama came twice, including post-election before this runoff, which was really aimed at getting people out to vote here in Atlanta, in urban areas, to try to get the black vote and the young vote mobilized for Raphael Warnock. Where Herschel Walker has been, you know, he's been flanked by Republican senators like Tom Cotton and Lindsey Graham. And to your point, most recently, Brian Kemp. The question, though, Tim, is was that too little too late? Brian Kemp really kept his distance during the general, knowing that this was kind of a Trump-picked candidate, certainly a Trump-endorsed candidate. And Donald Trump doesn't get too far here in Republican circles in Georgia. We'll see how that plays out tonight, of course. But Brian Kemp, you know, put his machinery and his money behind Herschel Walker. He hasn't done too many in-person events, and he certainly was not on stage with them last night.
Joe, you've got a big interview coming up. The Georgia Secretary of State, Brad Raffensperger, on the Senate runoff.
Yeah.
We know he's been so big in terms of the last presidential race. What is it you want to hear from him?
Well, we're going to get an update on how the count is going to be conducted tonight to get a sense of, you know, when we might get some results. But look, this is somebody who, you know, as you're alluding to, got the perfect phone call from Donald Trump. Has been the center of political action here in Georgia. He ran the runoff 2 years ago. He's running this runoff now. And I'm sure he has very strong feelings about the positioning of the Republican Party as we head into this election night. He'll be with us at the top of the program at 5.
Joe, is that your scooter behind you? If you're watching us on YouTube, if you're watching us on Quick Take.
It's not.
Okay.
But maybe I'll rent it and drive away with it.
Yeah,
I think someone's voting inside. Hey,
that's
we got a
shared
voter.
Scooter.
Don't drive away. We need you all evening long. Joe Matthew, thank you so much. Joe is host of Bloomberg Radio Sound On. He will be covering the race, the Georgia Senate runoff race, and we'll see whether or not we have some kind of conclusion, as Joe talked about. But you can catch Joe speaking to the Georgia Secretary of State, Brad Raffensperger, on the runoff. That's today at 5 on Bloomberg Radio.
Thought it was pretty remarkable just now to hear from Joe that we could be in 24 hours from now, we could be talking to Joe. He could still be on the ground there, not actually knowing who the winner is.
It's just such a different environment. We saw it with the last presidential race, right? Like, our assumption that we know by the end of the night, and now we know things don't always work out this way. Georgia's a special case, right, because of the closeness of the election and what their state rules are, but nonetheless, interesting to see, and we'll see what the outcome is.
Let's get to world and national news. We got Nancy Lyons standing by in our 99.1 studio in Washington, D.C. Hey, Nance.
Thanks, Tim. The police officers who defended the Capitol January 6th are receiving more than thanks today from lawmakers. They're receiving congressional gold medals. House Speaker Nancy Pelosi did the honors.
May this medal, the highest honor that Congress can bestow, serve as a token of our nation's deepest gratitude and respect.
The medals will also be placed at the U.S. Capitol Police Headquarters, the Metropolitan Police Department, the Capitol, and the Smithsonian Institution. Criminal referrals in connection with last year's attack on the Capitol will be made to the Justice Department. That's according to the chairman of the January 6th committee, Benny Thompson. He would not reveal specifics, though, to reporters, as the panel is under pressure to finish its work before the end of the year. Democrats and Republicans need to work together to pass a big spending bill. That's according to Senate Majority Leader Chuck Schumer, who says they are struggling to reach consensus. He says the spending package is critical for the military and the preservation of national security. U.S. health officials are struggling to address slowing flu vaccine rates among children.
Data show the slowdown is mostly among white children. The CDC says at the same time, flu vaccination rates among Black and Hispanic kids are on the rise. Sandra Freihofer with the American Medical Association calls it booster fatigue, but warns if you don't get your shots, you could get really sick. There are 47 jurisdictions reporting high or very high levels of the flu. This year's harsh season may be caused in part by reduced immunity after lower exposure to viruses thanks to masking and social distancing. In Washington, I'm Amy Morris, Bloomberg Radio.
At the World Cup today, Spain was eliminated by Morocco in a game that went to penalty kicks. Portugal now leads Switzerland. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks down again, 4 in a row for the S&P 500 index, and we are just about at our lows of the day, with the S&P 500 index down now by 1.9%, lower by 75 points. We have got the Dow down 485, a decline there of 1.4%. NASDAQ down 266, a drop there of 2.4%. Stocks are slumping amid downbeat economic warnings from bank chiefs at a time when concerns about the impacts of Federal Reserve policy on growth and corporate earnings are running rampant. Lisa Shallot is Chief Investment Officer for Wealth Management at Morgan Stanley.
Yes, CEO confidence is deteriorating, but I still think a lot of corporate guidance is delusional in terms of the fact that they, over the past 2 years, benefited from both a pull forward in volume and 7-8% pricing power. So you're talking about nominal top lines that were growing in the double digits.
10-year yield 3.51%. Spot gold little changed, up 0.1%. 1770 the ounce. West Texas Intermediate crude down 3.4%, 74.34 a barrel. Mirati Therapeutics shares down the most in 6 months as results of studies combining its experimental lung cancer drug with Merck's top-selling immunotherapy disappointed investors. Shares of Mirati down now by 20.6%. Apple's being sued by 2 women who say its AirTag devices make it easy for stalkers to track and terrorize victims. Apple down 3.1%. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Tuesday. And a most read story in the Bloomberg today, it is about the Yale professor who became an enemy of the Russian state over a list. He's a guest that we've had on, this individual, on our air in the past. And this story is in the new issue of Bloomberg Business Week.
With more, we're joined by Bloomberg Business Week contributor Rob Mandelbaum. He joins us on the phone from Brooklyn. Joining us along with him is Bloomberg Business Week senior editor Dimitra Kesanides. She joins us via Zoom from New York City. This is incredible. I had no idea. Carol and I have spoken several times to Jeffrey Sonnenfeld. And, anyone who listens to our program or watches Bloomberg television certainly knows his face, knows his voice. How did he find himself, Dimitra, just a few months ago, an enemy of the Russian state?
Sure. Well, you know him, and many people know him, given so much work that he does with respect to CEOs and leadership and the roundtables. He has the ear of many CEOs around the world and had been contacted, if I'm not mistaken, by some folks saying, this is something we need to look at, is what companies are pulling out of Russia and what companies are staying behind, and how will we make these distinctions right after Russia invaded Ukraine? So he got a little bit of play about this, but as we expanded our look at business school stories, he became somebody that I was focused on, and I thought, well, I'm curious to know what Jeff Sonnenfeld is up to, and I saw little snippets about some of this work, but nothing really that delved deeply into how this all became such a big list and became such a powerful list. And that is how he got onto my radar with this. And then I contacted Rob, who has been a regular contributor to Business Week,
right,
and asked him if he would be interested in taking a closer look. And I think that from the first minute, we'll let Rob answer this, but I think he was intrigued, given that there were certain aspects of the story that had not been covered at all out there, and that really were very meaningful to, again, what is it that this list does,
right,
really? What kind of power does it wield? So I will let Rob talk about that.
All right, Rob, come on in.
Hi.
Hi. So
you would like me to talk about it?
Yeah. Tell us about, you get this assignment and you start looking into this story on Jeff Sonnenfeld. Tell us what you found out.
Well, I mean, the first thing I found out was that this was that the list itself was this was actually something that came from his sort of correspondence with CEOs. It wasn't something that he started to do. It was something that they asked him to do because these were CEOs who had pulled out of Russia, and they felt like the business media, but not Bloomberg Businessweek, was conflating what they were doing, actually pulling out, with other companies that were sort of sending thoughts and prayers to the Ukrainian people, but counting their Russian rubles and that sort of thing. And so that's where the list started for him, was just sort of trying to figure out who was actually leaving Russia and who was sort of making noise like they were leaving Russia, but not really.
It's pretty incredible because, Sonnenfeld is certainly, Professor Sonnenfeld is certainly associated with the list, as you write. But at the same time, he's got a research assistant and then all of the volunteers who ended up helping with this list. So who actually worked on it and is working on it, Rob?
There were, at one point, up to 42, I think, other people working on it. And many of them were undergrads at Yale and other schools. They were people like a guy I talked to named Franek Sokolovsky, and he was a freshman at the time. He was studying economics. He had actually heard about some of Sonnenfeld's earlier work, sort of organizing CEOs after the 2020 election to sort of protest, the overturning of the election. And he had heard about that even before he got to New Haven and resolved to work with Sonnenfeld. And it happened that this was the project, and he's from Poland, and so very close to Ukraine. He ended up getting so involved with it that he rescheduled his classes, for the spring, some of them for the summer, so he could work on the list in the spring. And he recruited a bunch of other students at Yale and at other schools to work on the list for him. And a lot of those people were Poles who spoke not just Polish, but Russian. And, that gave this team an inside edge, able to analyze Russian material that doesn't normally get translated.
I want to bring Dmitry back in a second, but before we do, Rob, so how did he ultimately then become an enemy of the Russian state as a result? It's just, were they so ticked off that he was accumulating this list? What?
It started with the list, and then it became, it was mostly the list, but then he started doing some research. And he had published research, I think, in late May, indicating, that if you were a company pulling out of Russia, you saw a benefit to your stock price, or you paid less for debt. Like there was a market reward for pulling out of Russia that you could sort of tie to the announcement that you were leaving Russia. And he ended up on a stop list. This was in June, of people who weren't allowed to go to Russia. I don't think that bothered him too much. I don't think he was planning to go to Russia anytime soon. There are about 1,000 people on that list now. At the time, there were far fewer.
He wears it as a badge of honor, Rob.
Oh, he does. Yes,
but at the same time, there's a little bit of nuance to it because he won't
below
come
the
out
First Lady, above Mitch McConnell.
Exactly, and he won't. But he won't come out and say that he thinks it's necessarily 100% a good thing. Like he's not going to come out and say that companies should leave, right? He stops almost by saying that.
It's a very semantic, yes. It's a very semantic distinction, but he won't. You can press him, and he won't say companies should leave Russia. At least not officially, but he'll call, as you talk to him about it, he'll call those companies that did courageous. And I mean, the whole idea that companies that leave Russia get an A grade and companies that stay get an F grade,
right,
has implications, it seems to me, right?
Hey, Dmitry, really quick, just got about 20 seconds left here. What I love is I feel like there's going to be a second story for you guys in the Business Week team and Rob, because Sonnenfeld has another target, Saudi Arabia. Just quickly, 20 seconds. You guys thinking about this, perhaps?
We are thinking about it. We're looking at it. I mean, as I said, with this is interesting because it started as a remit to kind of expand how we're covering these schools.
Right.
And this perfectly highlights just like the very interesting work that happens at many of these institutions. So we're thinking about it. I'm not quite sure what it's going to lead to yet, but stay tuned.
Well, it's going to lead to, I think, us reaching out to Jeff Sonnenfeld again and getting him back on. Guys, thank you so much. Dmitry Kasanides, she is senior editor at Bloomberg News. Joining us from New York City, Rob Mandelbaum. He's freelance contributor to Bloomberg Business Week, on the phone from Brooklyn. This is among our most read stories, and it's in the upcoming new issue of Bloomberg Business Week. This is Bloomberg Radio.
And now a roundup of the day's top business stories. The owner of K Jewelers in Zales is selling more high-end jewelry, which is helping the company overcome a slowdown in demand from lower-income shoppers. Around 30% of Signet sales are now what the company calls accessible luxury. Those are items that cost between $1,000 and $3,000. Signet shares, they are surging today, up by 18.3%. Sources tell Bloomberg Apple is scaling back ambitious self-driving car plans for its future electric vehicle. It is postponing the car's target launch date by about a year to 2026. Apple shares down now by 2.8%. Wells Fargo CEO Charlie Scharf says the bank is working to find the right balance of how much to raise the rates it's paying depositors while protecting the firm's profitability. The lender sees increasing rates on deposits more as a tool to retain franchise customers than a way to attract new clients. And today we've got Wells Fargo down now by about 1.7%. Goldman Sachs Group's David Solomon is warning about pay and job cuts amid an uncertain outlook, saying you have to assume that we have some bumpy times ahead. He made the remarks this morning talking with Bloomberg Television and Radio. Goldman Sachs shares, they're down now by 2.7%. Also lower, J.P. Morgan Chase down 0.7, and Bank of America lower now by 4.9%. It is a down day on Wall Street. Coming up, we will have more on the markets for you. S&P now down by 1.7%. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Massar live in the Bloomberg Interactive Brokers studio on this Tuesday, December 6th. Let's send it on over to Nancy Lyons now. She's in our 99.1 studio in Washington, D.C. for world and national news. Hey, Nance.
Thanks, Tim. The leaders of both parties in both houses are expressing their thanks by awarding the Congressional Gold Medal to the U.S. Capitol Police and the D.C. Metropolitan Police, who fought off the insurrectionists on January 6th last year.
House Republican leader Kevin McCarthy at the ceremony in the Capitol Rotunda.
These brave men and women are heroes. Heroes who protected so many from harm on that day.
Senate Democratic leader Chuck Schumer paid tribute by name to the officers assigned to protect him.
My detail suddenly came up and said, "Senator, we have to get you out of here. You're in danger." We ran out of the chamber. At one point, I was within 30 feet of the rioters before my brave detail pulled me to safety.
The chiefs of the two police forces described the bloody warfare in which their officers had to hold their ground. In Washington, Irv Chapman, Bloomberg Radio.
The power is still out for thousands in Moore County, North Carolina, after two power substations were hit by gunfire over the weekend and knocked offline. These residents are still feeling frustrated.
My house, there's no power, no service, so all the food in my fridge has gone bad.
It's bad. What happened? Bad.
Duke Energy says it hopes to have most of the power back on by Thursday. Authorities are still seeking those responsible for that attack. In Colorado Springs, the suspect in a deadly shooting at a gay bar was formally charged today with hate crimes as well as murder. 5 people were killed, 17 others wounded in that attack. At the World Cup today, Spain was shocked by Morocco and is heading home. Portugal now leads Switzerland. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic, live here in our Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Quick Take. In just a few minutes, we're going to catch up with our TV colleagues and talk about the markets. And we've seen pretty much a downward trend when it comes to the equity trade. So we'll get into that in just a moment. In the meantime, a couple of stories certainly on our radar. And one has to do with Credit Suisse in particular.
Yeah, Credit Suisse bankers are trying to entice rich clients with higher yield notes and bonus deposit rates in a bid to quickly recoup as much as possible of the almost $90 billion recently pulled from the bank.
Yeah, I mean, this is something, we've heard from these big bank CEOs. We're going to talk about it more with our TV colleagues in just a moment. We talked about it with Sri Natarajan. They are definitely from that Goldman Sachs financial conference here in the United States. Specifically, it's a negative tone. Not all of them. Discover, I think, was somewhat upbeat, but it does feel like a pretty downward tone. And so, in the meantime, the big banks are thinking about how do we attract new customers. And Credit Suisse is a special situation, to be fair, but nonetheless, they're trying to bring in, I guess, some of those wealthier clients.
Should we talk about Bitcoin miners?
Yeah, let's do it.
All right. This is an interesting
I know this
one.
is a story that's really
and we did a crypto IRL all about Bitcoin mining, and 2 episodes about energy. So this one's close to my heart. The Texas grid operator is launching a program for Bitcoin miners to curtail their power usage during periods of high demand. It's a move intended to alleviate concerns that the crypto industry adds additional stress to a system vulnerable to extreme storms. We see that the grid comes under pressure both in the winter and in the summer, as we saw a couple years ago in the winter. And in the summer, there were even Bitcoin miners who took their rigs off the network because of strain due to high temperatures and then people turning on their air conditionings as a result.
Yeah, so they're going to be asked to curtail power consumption in exchange for payouts until long-term rules are established. This is coming from the grid operator in Texas, putting out a statement. Registration begins Tuesday. The program is expected to go live in January, but this is, one of the realities, right, of the crypto world in terms of the energy use. It's a conversation that comes up often. All right, in just a moment, we're checking in with our TV colleagues. We're going to talk about the markets. You are listening and watching Bloomberg Business Week on Bloomberg Radio.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left in the trading session. Romaine Bostic alongside Katie Greifeld. We're joined right now by Carol Massar and Tim Stenivik. And we welcome our audiences across Bloomberg Television, radio, and YouTube. Carol, a little bit of Groundhog Day here when it comes to U.S. equity markets. Pretty much a rinse and repeat of what we saw on Monday.
I feel like we've seen rinse and repeat this market trade so many times here in 2022. I'm ready for 2023. We've also seen this.
Oh, really? Did you see the Bloomberg economics forecast?
No.
Okay, so don't
so
look.
should we just fast forward to 2024? Let's
maybe.
just do it. All right, we've got to wait. In terms of outperformance, we've seen this trade too. In terms of bucking the overall U.S. downward trend, Chinese names once again moving higher, up about 1.2%. If you look at the NASDAQ Golden Dragon China Index, this index is up about 9% in the past 4 trading days. Pick your specific names. These are top in the NASDAQ 100 today. Baidu up about 2/3%. JD.com up almost 2%, and Alibaba up about 2/3%. You did get some news last night. China reporting fewer COVID-19 cases, so maybe we're starting to see some easing. And of course, we've all talked a lot about the easing by regulators and lawmakers over there in terms of COVID zero, the policy. But stay tuned.
Stay tuned.
It ain't over yet.
It ain't over, and it ain't over for us talking about big banks, because we heard a downbeat commentary about the economy from CEOs of Bank of America, JP Morgan, Goldman Sachs. And then just before we went to air, CNBC reported that Morgan Stanley has cut about 2% of its staff. We are seeing a broad sell-off in bank stocks over the last few days. Look at this. Over the last 4 days, the KBW Bank Index down 8.5%.
Yeah.
Right now, 23 of 24 stocks in the index are lower.
Yeah, financials really dragging us down, as are tech, as are energy, and, well, honestly, pretty much every sector out there. Here are your numbers, 39, 32 on the S&P 500 after that poke above 4,000, that poke above that 200-day moving average. A lot of those technical levels have really been shunned here, at least over the last couple of days. The Dow down about 1%, the NASDAQ Composite down 2%, and the Russell, Katie, down about 1.7%.
If you look at the sector level, I have some good news. Actually, utilities now in the green. Well, okay, I blinked. Now they're in the red again. Okay, well, we'll check back in. But in any case, this
You're
is
like Carol now.
Katie, yes.
It's only day 2, and he's already
Good
giving you a hard
job.
time, Katie?
Well, I don't know. Hopefully I'm allowed to do the next 3 days.
You got 3 more days together.
Okay.
It's very indicative of the market that's out there.
Setup to yesterday. Energy is at the bottom of the pack, down 2.7%. Utilities, keep an eye on this one. It looks like it wants to go green. That's what I meant to say.
Oh, there you go. I do want to go back to financials here. I was actually surprised by this. Remember, Bank of America actually fell 5% yesterday. It's down another 5% here on the day. Actually, one of the worst performers among the financials over the last few days. In fact, over the last 4 days, it's had really just taken a beating here. And there doesn't really seem to be anything specific to the company. This really just seems to be some of the broader macro concerns and how that feeds in to bank stocks, and particularly those banks that have big consumer exposure. So keep an eye on that. Royal Caribbean shares down about 4%, and this could be the credit story, I think, going forward here. There was an interesting downgrade over at JP Morgan, which talked a lot about the cash needs for this company. They've raised like $10 billion over the past year, but they're saying by the end of next year, they could actually still see a shortfall with regards to some of their obligations. Definitely something to keep an eye on. And if you're looking for any bright spots, guys, Textron up 5% on the back of that U.S. Army contract. And apparently we're all still buying jewelry. Signet Jewelers is up 18% right now, having its best day since 2020. I do want to turn your attention, and I know that, Katie, you're a big jewelry person, by the way, so hold your horses on that. Okay. But before we get back to that, I do want to point out some of the estimates that we've been seeing from some of the strategists on Wall Street. And for the first time, basically in this millennium, effectively going back to 1999, this is going to be the first year that we've headed into a year where strategists are actually projecting a decline in the S&P 500. And that's a big deal because, look, I mean, we know stocks always go up, right?
I've heard
ultimately.
That. Yes.
Not every day, but ultimately that's the trend. All right, well, basically what they're saying is that's not going to be true for 2023, Carol.
Hold your horses. I see what you did there, Romy.
I saw that from
It's a little bit of an inside joke there. Listen, we're all in.
Do you have a horse too?
I'm not telling you.
Okay.
That would be news.
That would be news.
Maybe a little one, little horse.
Right,
all right,
little pony on the yacht.
All right, can we talk about what really matters? And that is the big bank CEOs. Our exclusive interviews, thanks to Sonali Basak, who's been over at the Goldman Sachs U.S. Financial Services conference today. And all of them weighing in, it does feel like an overly negative tone. And I do feel like this was the soundbite, certainly heard around the financial community, heard around the world, heard around the Bloomberg newsroom. It came from Goldman Sachs CEO David Solomon. Here's what he had to say about the outlook.
We're at a very uncertain time, given we're changing monetary and economic conditions very, very quickly. And that's certainly having an impact of slowing down economic activity. And so if you're running a big financial services firm, I think you have to assume that we have some bumpy times ahead. We could see a recession in 2023 also. And so I think you've got to be cautious and prepare.
And that is an exclusive interview that Bloomberg Sonali Basak had with the CEO of Solomon. We're talking about, Solomon, whoa, taking you back there. Goldman Sachs, David Solomon. Do you guys remember Solomon Brothers?
Yeah, we do.
Okay,
but you know what? So there's a couple
pour
of
one out
interesting
for them
things about this. One is the fact that, the bank's own economists don't necessarily see a recession coming. And then it also got me thinking, Katie, about a comment that you made, I think, months ago. I don't remember if it was a tweet or if it was a comment that you made on one of our shows about just kind of like talking us into a recession. And that kind of seems like, what the outlook is, at least on a day like today when we hear from these big bank CEOs.
It feels like it in the months since I made that tweet, and it was a tweet, I remember it well. It feels like recession really has become the consensus, not just in the US, but obviously in the Eurozone, in the rest of the world when we look to 2023, which I know Carol is eager to get to, but it looks a little cloudy.
It looks cloudy, and we should point out, too, it's not just the economists. I mean, a lot of the strategists we've talked to, they've said that. They're taking defensive allocations. They're talking about using the dip in volatility to hedge. So there's a lot of talk here that any sort of idea that we're sort of, headed for rosier times, at least soon.
The Discover CEO did say the spending by the U.S. consumer is still holding up really well. B of A's Brian Moynihan said the spending by consumers of B of A is up over last year. So
and Amex said the same thing.
I know, right?
Yeah.
All right, guys, that must be all right. We got to wrap.
Yeah, time to go.
We'll be back. Our cross-platform coverage will continue on radio, TV, YouTube, and Bloomberg Quick Take. We're going to count you down to the close at 4 p.m. Wall Street time with Beyond the Bell.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week here on Bloomberg Radio, on YouTube, and on Bloomberg Quick Take. We'll rejoin with our TV colleagues in just under about 45 minutes' time. We'll count you down to the close. Definitely a negative tone here today. I think there is more concern about recessions. Can we talk ourselves into recession? I think this is going to be where something like the labor market is really important. We continue to see strength and certainly wages. If you are concerned that you might lose your job, or if you're looking and you can't find a job, that's when you really start to retrench. But, we'll have to see. We'll have to watch the spending numbers.
At William & Mary all the time about sentiment.
Peter Atwater.
Peter Atwater,
yeah, he's
exactly. Great. And this is exactly why he follows sentiment so closely, because the way that we feel reflects our spending. And I want to explain my comment a little more about, us talking ourselves into recession here, because I think, I think you have to think about this in the context of like you said, decision-making, Carol, from an individual perspective, but what
Right.
about when it comes from a company perspective? If they're pulling back on spending,
Right.
if they're pulling back on hiring, it kind of ends up being, in some sense, a self-fulfilling prophecy.
Potentially pulling back on bonuses. We heard it from certainly the big bank CEOs. Hey, let's get another gut check, if you will, on the economy. This is another one of our most read stories on the Bloomberg on this Tuesday. It's about the Bloomberg economics base case for 2023 next year. Romaine was talking about kind of the doomsday for next year. Not doomsday, but not so upbeat. The Bloomberg economics base case for next year pegs global growth at a meager 2.4%, down from 3.2% in 2022, and the lowest, leaving aside the crisis years of 2009 and 2020, so the lowest, if you take those out, since 1993.
We got Tom Orlick with us. He's Bloomberg Economics chief economist. He joins us via Zoom from Washington, D.C. Tom, good to have you with us this afternoon. We're talking major shocks and major aftershocks as well. COVID pandemic, Russia's invasion of Ukraine, and then the associated aftershocks. What specifically are you referring to?
So one way of thinking about this, Tim, is that in 2022, the global economy has been hit by these huge shocks. You mentioned them. High inflation, Russia's invasion of Ukraine pushing prices even higher, and then the central banks, the Fed and the ECB, with their aggressive response to bring inflation back under control. In 2023, what we're going to be encountering is the aftershocks. The benefit of central banks hiking aggressively is that hopefully prices come back to target. The cost is that growth takes a significant hit. So we're anticipating that Europe will start 2023 in recession. The US will end 2023 in recession. There's potentially a significant offset from China as COVID-0 reopening gives the economy a one-off boost. Still, if you put the pieces together, the outlook for global growth in the year ahead, it's not that impressive.
Hey, Tom, a couple things come to mind. We're going to talk with James Rickards in a bit on our broadcast, and he's got a new book, Sold Out, How Broken Supply Chains, Surging Inflation, and Political Instability Will Sink the Global Economy. I know he's a bit of a doomsdayer, but what I do wonder is we still don't know, right, really what supply chains, the impact longer term, pushback against globalization, what it will mean for economic growth. So you've got a base case, but could it be worse? Is it more likely to be worse, or is it more likely to be better? How do you gauge it?
So I would sort of think about them in two different ways, Carol. The big deglobalization story, the split between China and the United States, the split between Russia and Europe. These are going to be stories that play out not over a year, but over decades, right? And over that time frame, we'd expect there to be winners and losers, but overall, if you've got less global trade, less global investment flows, the impact is going to be weaker growth and potentially higher inflation. Focusing specifically on 2023, so our base case is a little bit gloomy. We think global growth for the year comes in at 2.4%. Could things be a bit better? Sure. If there's a warm winter in Europe and gas prices stay low, then Europe could dodge recession or have a shallow recession. The Fed, of course, still hopes for immaculate disinflation, where job openings come down and wage gains come down, but unemployment stays low. And so they can get prices back to their 2% target without pushing the US into a downturn. Those are some of the positive upside risks.
Hey, Tom, let's talk China. You spent many years focusing on China in China. I'm wondering about what the China economy has to do with the global economy, especially in the context of potentially easing COVID-0 restrictions. And I use the term potentially, very lightly.
Yeah, I think I completely agree with you for putting that potentially in there, Tim. There's a huge amount of excitement right now because China is moving more quickly than expected to ease its COVID-0 restrictions. And the markets and the economists all expect that to be a boost to growth in the year ahead. But there's still a big question mark there, right? When you ease COVID restrictions, inevitably you see a rise in COVID cases. And when you see a rise in COVID cases, well, inevitably and sadly, you see a rise in illness, in hospitalizations, and in fatalities. And the big question we haven't had answered yet is, well, what happens in China when that second stage occurs? Do they continue with the reopening process and accept the cost to public health? Or do we see, at least in the short term, a reimposition of controls? So our base case is 5.1% growth in China next year, based on an assumption of gradual reopening. But that base case still has some question marks around it. Sorry, Carol, I interrupted you.
No, I interrupted you, Tom, so forgive me. What's interesting is when I was reading it on your story and you put out the base case and you said beneath that headline of 2.4% for global growth in 2023, diverging fortunes. And I do think about, as the world separates in different ways, what kind of instability, what kind of market opportunities, that potentially creates, whether it's for investors or I remember talking about diverging monetary policy, how that can cause some problems. How are you thinking also about that and the implications of that potentially on global economies?
So I think that monetary policy piece of it is really interesting, Carol. So 2022 was a year when a bunch of major central banks, the Fed, the European Central Bank, the Bank of England, a bunch of emerging market central banks, dashed as a pack into restrictive territory. It was the most aggressive and synchronized tightening of global monetary policy we've seen in decades. In 2023, with economic fortunes diverging, there's the potential, and our view, is that central banks are going to start moving in different directions. The Fed, we think, has got quite a lot more to do. We think they have to take rates all the way up to 5% and keep them there all the way through 2023 in order to bring inflation under control. The European Central Bank has got a bit of a different challenge. In Europe, it's mainly energy prices which are pushing inflation higher. And that means the ECB doesn't have to go quite as far as the Fed and maybe could begin reversing with rate cuts as soon as the end of 2023.
And we know the central banks can't do anything about pumping more oil, regardless of where they are, Tom. What about when it comes to developing markets, Tom, in the way that we could see some sort of, if we do talk about this with the idea of a recovery, the way we could see recoveries go different directions in 23?
So 2022 was a year when we saw sort of fears of a wave of debt defaults sweeping emerging markets. And we did have a couple of kind of crisis moments. Sri Lanka defaulted on its debt. Egypt had to devalue its currency. But really the kind of global wave of emerging market defaults, which some people were predicting as a consequence of aggressive Fed tightening, didn't happen. What's the outlook for 2023? Well, we think that emerging markets will continue to dodge a bullet when it comes to defaults, but we do think that the tightening we've seen from emerging market central banks is going to mean quite a significant slowdown in growth across much of the emerging market universe in the year ahead.
Tom, you have studied, written, reported, and analyzed, global economy and global economics for a while here. What is interesting? What's particular about this cycle? Is it just that we're coming out of a pandemic, an unprecedented stimulus coming at the global economy from lots of different walks, or what is it?
So, big shocks trigger big aftershocks. And I think that's the story of 2020, 2021, 2022, and it's going to be the story of 2023 as well. Remember when COVID hit in the first part of 2020 and China closed down and then reopened and got growth on target. And there was that kind of optimistic view that if the rest of the world could kind of follow that example, maybe this is just going to be a 2020 shock, right? Maybe 2021, we're going to be back to normal. Well, here we are in 2023, 4 years later, heading towards 2023, 4 years later, still suffering the aftershocks from COVID, the inflation that it caused, the central bank tightening that triggered, and now very likely the recessions in Europe and the United States. that follow from that central bank tightening. So big shocks trigger big aftershocks. That process takes a while to push through the system. For me, that's the big lesson of the last few years.
Every action has a reaction. Big actions have a big reaction. Love this research. So glad we got time. Tom Orlick, Chief Economist at Bloomberg Economics via Zoom from Washington, D.C. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another day of losses on Wall Street. The Dow, the S&P, NASDAQ 100 index, all moving lower. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks under pressure again today, with the Dow currently down 487 points. S&P's dropped 77, and NASDAQ is off by 276 points. The U.S. 10-year yield falls to 3.51%. Gold is higher by 3. Oil is under pressure, and Bitcoin is trading little changed. Among the main 11 S&P sectors, only utilities are in the green, and leaders to the upside in the Dow, Travelers and UNH while Boeing fell 3.6% after Airbus cut its fiscal year delivery target and led to the downside. In deal news, Borg Warner to spin off its fuel systems and aftermarket segments. And in other news, the Paramount CEO says they expect Q4 advertising coming in a bit below Q3. Wrapping things up, Facebook fell 7% after a report that the EU is targeting the company's ad model. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we got you, Bill Maloney, and I thank you to your live breaking news over your Bloomberg Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here in our Bloomberg Interactive Broker studio. And a story that is a Bloomberg exclusive. It's by our Mark Gurman. And it talks about Apple specifically and how it has scaled back ambitious self-driving plans for its future electric vehicle and postponed the car's target launch date by about a year in 2026, according to people with knowledge of the matter. We want to dig a little bit deeper.
Yeah, Mark Gurman with the exclusive, as you mentioned, Carol. We've got Ed Ludlow with us. He's the co-host of Bloomberg Technology. He joins us once again for Bloomberg Plugged In. It's your weekly look at EVs brought to you by Audi. Don't let someone else drive off in the Audi model you've always wanted. Visit your local tri-state Audi dealer to get behind the wheel of yours today, or visit AudiOffers.com for more information. All right, Ed, let's talk Apple, and then we're going to talk broadly about batteries and their costs and what's going on, because something weird is happening when it comes to those raw materials. Was this Apple news surprising to you, the exclusive from Mark Gurman saying that they're pushing back the date of a potential release of a vehicle?
It's great reporting by Mark, and the headline that catches the eye is a pushback to 2026. But read the story on the Bloomberg terminal on Bloomberg.com, and according to sources, Apple's kind of fundamentally rethinking what it's going to do. They're basically moving towards a sort of advanced consumer car with all of the things you'd expect in it, a steering wheel, pedals, for less than $100,000, according to sources. Previously, they've been going for something completely different, you know, really emphasizing autonomy, a vehicle that looks very different from a standard passenger car, something more like a limousine where a number of passengers would sit facing each other without a steering wheel, without pedals. So it seems that Apple's going back to basics and that they're realizing this is going to take them a lot longer than they thought.
Let's remind everybody, Apple not the first one out there with a smartphone, and yet look at what they've done to that market. So is this
Right.
Apple? You know, I was thinking about Tim and I when we were at Stanford, and we ran into you on the West Coast in our San Francisco bureau, but talked to Mary Barra about a story that had just come out about these robo-taxis, right, essentially, and whether they were self-driving and, right, no steering wheel, that kind of thing. So I do wonder, Ed, is this a case of Apple being kind of Apple and being smart and saying, let's see how this plays out. We're not going to spend a lot of time and money on it. You guys figure it out, and then we'll jump in and do it even better.
So part of it is sort of Apple acknowledging how difficult it is for them to push into a new product area, right? They make some fantastic hardware, some excellent operating system and software. They don't yet make cars. They're starting from scratch. The other thing we've seen across the industry, whether it's from legacy automakers or some startups, is that the promise of full self-driving, real robotaxis, it's much further away than we thought. If you take Argo AI as an example, this was a company that was backed by Ford and VW. They just pulled the funding. They were like, we're not going to push this anymore. Billions of dollars a year aren't worth it, because what you're trying to achieve, not just on the tech side, but bringing it into the real world, is a much more distant vision than we have patience or time for. Apple kind of reflects that. Yes, this vehicle they're planning, according to sources, will have a high degree of autonomous capability on the highway. But making it fully autonomous and removing all the normal things in a car, a bridge too far for Apple right now.
Carol, I thought you were going to share the story that we shared last week when we were on the way back from Stanford. We were driving into San Francisco. Carol and I experienced Tesla's, you know, quote unquote self-driving for the first time in a rental from Hertz. But at the same time, we got to the city, Ed, to get dropped off at our hotel. And we saw a Zoox car right next to us. That's and we both took pictures of it. It'd been a couple of years since I've been in San Francisco. And I kind of thought, you know, oh, I haven't seen any of these. Then the next morning I wake up in the hotel, I open the curtains, I look out the window. There's like half the cars that I see on the street are self-driving cars, Ed. So it's like, you know, that's like what you see in San Francisco versus what you see in New York. But the reason I bring that up is because they still have an incredible amount of equipment on them. And these are test vehicles. These don't, they're retrofitted with cameras, with lasers, with LiDAR, with radar. So do these companies end up needing to actually build this technology into the vehicles. And you can talk about Elon Musk's different approach with, cameras.
Yeah, so Zoox and Cruise are two good case studies, right? On the streets of San Francisco, Zoox uses a fleet of retrofitted Highlanders, which have very prominent hardware on the outside, and I can tell you on the inside, quite loud, prominent computing power. But that's not what Zoox's end goal is. Zoox's end goal is a purpose-built shuttle-like vehicle. What those test vehicles are for are data gathering, to continuously improve the algorithms that power the eventual end product. And same with Cruise. Cruise operates now a pretty large fleet of test vehicles in San Francisco, many of them without drivers, actually. That's how far they've got. But their end goal as well, to build a purpose-built shuttle-type thing called the Origin. Tesla, different approach. It wants to leverage a global fleet of consumer vehicles for camera-based technology that are deployed in real-world environments. But the end goal for Musk, very much that Tesla doesn't sell you a vehicle, it operates its own fleet. It's just that across that industry, no matter how bullish or the fighting talk, I think there's a sense that actually this is quite a few years away still.
All right, because when we make promises, we always like to deliver, Ed Ludlow. So let's talk about the battery market for EVs.
Big news.
What's going on in terms of quantity, pricing? What do we got?
Yes, so this is the annual Bloomberg New Energy Finance Survey. It's pretty thorough as data sets go, and they've been doing it for about 12 years. For the first time since they started the data set, the average price of a battery pack has gone up. It's gone down for 12 consecutive years. In 2010, we're at around $1,400 per kilowatt hour, or $1,000 per kilowatt hour. In the most recent survey, we've just ticked up higher, 7%, to $151 per kilowatt hour. That's really important because when you think about electric vehicles, by the way, that $151 per kilowatt hour average is across all industries and battery types. For EVs specifically, it's $138 per kilowatt hour. But it's such a big part of the cost of an EV. You want to see it continuing to come down. And this is the inflection point, right, guys? To our YouTube audience, we're showing pictures of all kinds of EVs on the screen right now. The point being there's so many more models coming to market. But if the price of batteries is going up at the same time, that could prove costly for the consumer at a moment where we want to see adoption accelerate.
Can I just say, I feel like we knew this was going to come, Ed. Like, as everybody ramped up production, basic...
supply and demand.
Exactly, Eco 101.
Yes, this is Eco 101, and demand has really kicked off. I think there's also some structural issues, right? That we're having trouble unlocking supply of lithium and also disruption from COVID. But next year, we tick up to $152 per kilowatt hour average. We start to come down in 2024. Big piece of news you might have missed. BNEF has kicked back by 2 years its target of parity, which is where battery packs are $100 per kilowatt hour. And that number is so crucial because it makes an EV on price parity with gas engine cars or even cheaper. And they're delaying that by 2 years, which is actually a pretty fundamental moment for this industry.
Remember we talked about with the North Carolina Commerce Secretary about the lithium plant potentially by Albemarle in North Carolina.
It raises the question, Ed, about the materials, the rising costs for materials that go into these batteries. They include nickel, they include cobalt, we've mentioned lithium. What does the development look like, the R&D look like for alternative materials in batteries? Because we've talked about this with guests in the past that say, you know what, necessity is the mother of invention, and if these materials get too expensive, I'm confident we'll be able to build batteries that have different components.
Well, this is the moment where I go, aha, it's not all bad news. There's some good news. And the good news is that the battery prices on average would have been much higher had we not moved towards new technology. And that technology is lithium iron phosphate batteries. The main thing for the audience to know about that is that it's a battery that does not include nickel or cobalt, which basically is more readily available material. And it means that we can kind of de-risk and diversify our supply chain in that front, and that is a positive. The other way of looking at it is we now need to unlock greater supply of lithium iron phosphate, which has environmental considerations and it has R&D considerations in markets all across the world. But that's where the technology focuses on energy density, which chemistries give us the greatest energy density and therefore the best bang, or bang's not the right word, I guess the best shock or charge for our dollar, our buck, and then we go from there.
Well, and this is why we've been talking so much about China when it comes to all of these precious minerals, if you will, components that go into the electric vehicle world, and they've been very smart in terms of, lining up supplies because they certainly have seen where the market is going. Ed Ludlow, thank you so much, co-host of Bloomberg Technology at Bloomberg News, joining us from our 960 studio in San Francisco. Catch Ed and Caroline Hyde. You can catch them at 5 p.m. Wall Street time on Bloomberg Television.
Let's get one more check of the markets as we get, just under a half hour into the close of trading. We're seeing the S&P 500 off of session lows, but still down 1.7%. The NASDAQ taking the brunt of it, with tech stocks sliding down 2.2%. The Dow down 1.3%. All right, let's get on over to world and national news. We got Nancy Lyons standing by in our D.C. newsroom with an update. Hey, Nance.
Thanks, Tim. Georgia voters are heading to the polls today for the state Senate runoff election between Democratic Senator Raphael Warnock and Republican challenger Herschel Walker. Bloomberg Washington correspondent Joe Matthew is in Georgia and says the two candidates took very different approaches in the closing days.
Warnock did a half a dozen events over the weekend. He's doing a lot of interviews. He's holding rallies. He's showing up in public places where Herschel Walker has been pinpointing his way across some of the northern reaches of Georgia, some of the more rural areas. He showed up at a gun range and a tailgate party yesterday to make his closing arguments.
Bloomberg's Joe Matthews says if Democrats win, they will control committees and agendas, while a Walker win means a split Senate like we've been seeing for the past 2 years. Senate Minority Leader Mitch McConnell is now responding to former President Trump's recent comments that parts of the Constitution should be terminated.
Anyone seeking the presidency who thinks that the Constitution could somehow be suspended or not followed, it seems to me, would have a very hard time being sworn in.
McConnell would not say if he would support Trump if he receives the Republican nomination in 2024. The House committee investigating the January 6th attack will recommend some criminal prosecutions. Chairman Benny Thompson told reporters today the panel is still working out the details, and he would not say who could face charges. President Biden is spending his afternoon in Phoenix, where Taiwan Semiconductor is building a $12 billion plant and announcing plans to build a second one and boost its investment to $40 billion. At the World Cup today, Spain was sent packing by Morocco, who won the match in penalty kicks. Portugal leads Switzerland. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're off session lows, but the Dow, the S&P, NASDAQ still very much in the red. 4 losing days in a row for the S&P 500 index, right now down by 63 points. That is a drop of 1.6%. Dow Industrials down 391, a decline there of 1.1%. NASDAQ is down 243, a decline there of 2.2%. 10-year yield 3.52%. We've got the 2-year yielding 4.35%. Spot gold up $2.50 the ounce to $17.71. That is a gain of 0.1%. Crude, a big story today. A pullback for West Texas Intermediate, down 3.3%, $74.39 a barrel. And Brent now at $79.56, drop there of 3.8%. America's labor market is tight, but Neela Richardson, chief economist at the ADP Research Institute, told Bloomberg Radio this morning more has to be done to boost productivity.
In order to get the kind of efficiency that we need that actually produces profits and increased standards of living, we need productivity. Right now, wages are going up, but it's because firms are competing with each other for headcount. That's not a good reason for wage increases.
This update brought to you by Audi. Don't let someone else drive off in the Audi model you've always wanted. Visit your tri-state Audi dealer to get behind the wheel of yours today, or visit AudiOffers.com for more information. Airbus says it no longer expects to meet its full-year aircraft delivery guidance of 700 planes after supply glitches throughout the year impeded its ability to ramp up production. And it is truly a sad day for airplane enthusiasts around the world. Boeing plans to roll out the final 747 jumbo jet late today from its factory in Everett, Washington, ending production of the aircraft after more than 50 years. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just under 8 minutes left in today's trading session. Shortly, we'll check in with our TV colleagues, talk about the trade. Oh,
we got like
18 minutes.
Yeah, we got like 18 minutes left, Carol.
Yeah, sorry.
That's
It's been that kind of day. It feels like it's moving fast and furious. Having said that, as Charlie mentioned, we're just rounding around the worst levels of our session when it comes to the equity trade, but pretty broad-based. Only utilities, when you look at the major industry groups in the S&P 500, actually showing some green today.
And it's not much.
No.
It's broad-based selling, a real risk-off day today. It's time for Drive to the Close. We're doing that today with Tony Roth, CIO at Wilmington Trust and Investment Advisors, the investment advisory arm of Wilmington Trust and M&T Bank, joining us via Zoom in Philadelphia. Good to have you with us, Tony. How are you?
I'm good, Tim and Carol. Thanks for having me.
Well, thanks so much for joining us. I'm thinking about the program that Carol and I did last Wednesday after we heard from Fed Chair Jay Powell and the mood that we saw in equities after investors pretty much solidified the idea that December, that rate hike that's coming next week is going to be 50 basis points instead of 75. Look at the shift in tone since last Friday and the way that we've seen the S&P 500 down now for 4 days in a row. How do you explain it, Tony?
I think it's actually surprising that it's taken so long to get to these levels of drawdowns in the market.
Wow.
When you consider the labor market report that we had on Friday. So we were down on Friday, but not by a lot, right? And when you consider how bad the labor report was, and then we had the ISM services report, which is really a very laser
bad in meaning it was a strong report and wage pressure.
Wage pressure, significantly lower participation rate. And then on the ISM services report, which is basically another view into wages, we saw a very strong services report. And the market is dealing with the reality that we are going to have a persistent inflation problem specifically within the wage arena. And that is going to have an impact on where equities trade over the next probably 2 to 4 months. And equities are probably priced too high right now and need to move not just a little bit lower, but probably a lot lower.
And is that how you feel about across all of the equity landscape, or are there certain names in particular that you think maybe provide some opportunity in this environment?
Well, on a relative basis, there are things that we like. We like some healthcare areas. We actually like some financials. We continue to like energy in this environment. We like materials. But in an environment where we have higher rates and where profitability and pricing power are going to matter, selectivity is much more important than what we've seen in many, many years. So take healthcare, for example. Healthcare is a very variegated space. So you have pharmaceutical companies, which are almost like staples, but they're staples that are growing at a nice pace. And then you have medical device companies, which are like big growth technology names, which are not going to do well in this environment. And so it really requires very careful selection as you go through this environment. But that's not to say that anything in the equity space is going to hold up particularly well over the next 2 months or so as we deal with the reality of a likely recession. And that also doesn't mean that we like bonds either, because we don't think bonds are particularly well positioned at the moment. And I could get into that if you like.
Yeah, talk a little bit about that.
Well, when you look at the bond market right now, we're relatively 350 on the 10-year. And you think about where inflation is and how persistent inflation is going to be, which we think is going to come down, but it's going to get stuck probably around 3.5% or so due to wage pressures and a few other factors. That means that the 10-year is still low relative to where it needs to be in this part of the cycle. So we're probably going to get back up to the 425 range or so on the 10-year. We're going to see credit spreads expand. And we have quantitative tightening, which is throwing more supply into the marketplace. So for all those reasons, even though a lot of people like to think that bonds are now very attractive because of the increased carry, they're not attractive in the short term. So are they a better evil versus equities right now? I think I'd probably actually rather put my money into equities than bonds right now, given those factors.
Yeah, it's an interesting predicament. And I do feel like at this point, despite the risk-off trade that we've seen certainly so far this week, we did see a rally just a couple of weeks ago. We saw a Fed rally thanks to Jay Powell. I do feel like we are in a universe where, Tony, volatility, and uncertainty is one thing that we can kind of count on, right? We just don't quite know if we're going to be in a recession in the U.S., what kind of recession it might be, what's the Fed ultimately going to do, because the economic data continues to be mixed. We just heard from big bank CEOs, our exclusive interviews, thanks to our Sonali Basak, with the likes of Goldman Sachs CEO and others, where the tone does feel kind of negative in terms of the outlook. But, you talk to another CEO, and we've had a lot on our air, Tim and myself, and they seem to still be upbeat despite some of the undercurrents and the narrative that's out there. So is it safe to say that we could kind of go either in a better direction or a worse direction at this point? Is it kind of like a 50-50 bet here?
Well, I think that it's a 50-50 bet, and the question is, will we have a recession or not? But we are going to have weakening regardless. I think that everybody, pretty much, there's a consensus out there that we're going to experience economic weakening. We're already seeing core goods roll over. We're seeing significant weakness in shelter, housing, which is going to find its way into the CPI data, which is a good thing. We are seeing some capitulation in certain areas of the service sector, notwithstanding $10,000 for Taylor Swift tickets, which maybe you can resell them for $20.
That's a unique case, though, right? We can all agree that that's a unique case.
Yeah, but across services, you are starting to see some breakdown. And if you look at the consumer is now at a point where they are approaching exhaustion. So the consumer is blowing through their savings. They're getting deeper into consumer credit. They're getting deeper into consumer credit in an environment where rates are higher than they've seen in a long time. And that means that the consumer is going to have to slow down on the services side as well. So all of that is happening. All of that is going to lead to economic weakening. The only question is, how bad will it get, and will it actually be a real recession?
Okay,
our view is,
go ahead, please, 30 seconds.
I was just going to say, we do think we'll have a recession, but we don't think it's going to be one accompanied by millions of job losses. Probably maybe up to 1 million job losses scattered across the economy. And then at the end of the day, we think this Fed is very concerned around the third rail, GDP. So as long as the inflation rate comes down to, call it somewhere around 3.5 or below by the middle of next year, the Fed is going to be very active to back down rates in order to not cause too deep a recession.
I thought it was interesting what you said about how many job losses, especially when we've had conversations where people say, yeah, we can have a recession, but the labor market can still be kind of ticking along here. Tony Roth, thank you. Chief Investment Officer at Wilmington Trust Investment Advisors, the investment advisory arm of Wilmington Trust and M&T Bank. You are listening and watching Bloomberg Business Week on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet with a roundup of the top business stories. Donald Trump's company, Developing Story, has been found guilty of engaging in a tax fraud over more than a decade, in which executives, including former Chief Financial Officer Alan Weisselberg, evaded taxes on company-paid perks, including free apartments and luxury cars. Just getting word, this is the first time a Trump business has been convicted of criminal conduct, and comes as the former president is running for a second term. So again, repeating the headline, Donald Trump's company has been found guilty of engaging in a tax fraud over more than a decade. Some of the other business stories that we're following for you this afternoon: the owner of K Jewelers and Zales selling more high-end jewelry, which is helping the company overcome a slowdown in demand from lower-income shoppers. Signet shares surging by 21%. Mirati Therapeutics shares fell the most in 6 months as a result of studies combining its experimental lung cancer drug with Merck's top-selling immunotherapy disappointed investors. Right now, we have got shares of Mirati Therapeutics lower by 23.6%. And Apple is being sued by 2 women who say its AirTag devices make it easy for stalkers to track and terrorize victims. Apple shares trading lower today by 2.5%. Again, repeating, Trump companies have been convicted in a New York criminal tax fraud trial. A down day on Wall Street. Coming up, we've got the closing bell. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening in, watching Bloomberg Business Week on this Tuesday. We're going to join our TV colleagues in just a moment, talk about the trade, because we do have stocks down. The S&P down for a 4th day in a row, but it does look like we're just kind of leveling off at our lows of the session. In the meantime, one story that definitely just popped on our radar, it's what we call a red sticky here at Bloomberg. Donald Trump's company found guilty of engaging in a tax fraud over more than a decade, in which executives, including former Chief Financial Officer Alan Weisselberg, evaded taxes on company-paid perks, including free apartments and luxury cars. It's the first time a Trump business has been convicted of criminal conduct, and comes as the former president is running for a 2nd presidential term.
Our colleagues Patricia Hurtado and Greg Farrell write that this is a, quote, momentous verdict that comes at a time when he faces a raft of other legal perils, including criminal probes of his handling of classified documents and of efforts by Trump and his allies to overturn the 2020 election.
Yeah, the jury reaching its verdict today on the Trump Organization's Trump and Trump Payroll Corp units after a month-long trial. During the trial, prosecutors in the office of Manhattan District Attorney Alvin Bragg showing that over a 13-year period, Trump executives often disguised holiday bonuses as consulting fees, and that Trump even paid for the private school tuition of Weisselberg's grandchildren. We should point out that the former president, Donald Trump, was not charged.
The financial penalty at sentencing is likely to be only about $1.6 million, but the impact on the Trump Organization may be greater. For example, it could have trouble making deals in the future.
Right, and we should point out that there's other suits going on. Letitia James of New York is pursuing a $250 million civil suit against the Trump Organization. She claims that the former president and 3 of his children inflated the value of the firm's assets and is seeking penalties, including a permanent ban on the 4 running companies in the state. We're talking about New York Attorney General Letitia James. So there's still lots going on, Tim.
Yeah, there's other criminal probes as well. The efforts that he and his allies made to overturn the 2020 presidential election, for example, also his handling of classified government documents at Mar-a-Lago, which is now his home in Florida. Trump has called the cases and investigations baseless political vendettas. He's been going on Truth Social. Last week, he wrote that the Trump Organization trial was wrapping up. He said there was, quote, no gain for Trump and that we had no knowledge of it.
All right, folks, just a few minutes left in today's trading session. We are rounding off our lows of the session, so we are off our worst level, still down about 1.5% on the S&P 500, down 4 in a row. NASDAQ, the laggard, down 2%. This is Bloomberg. We're heading over to our TV colleagues. Beyond the Bell, coming your way in just a moment.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Katie Greifeld, we're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Masser and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. And even Quick Take, Carol, 1.5% down on the S&P 500, 2 on the NASDAQ right now. I think all the commentary we got today out of some of those bank CEOs at the Goldman conference seems to have really doused sentiment.
Yeah, hard to ignore the negative tone, and we've seen it certainly play out on those big bank names in terms of their own stock prices. What I find interesting is here we are, with a minute and a half to go, guys, and we're rounding the corner and coming off our lows of this session. So interesting to find some in bottom feeding, if you will, among the equity investor front.
We just talked to Tony Roth. He's Chief Investment Officer at Wilmington Trust, and he actually said that he thinks that even with the sell-off that we've seen in the last few days, equities are still priced too high and that they need to move lower. He does think that we're going to have a recession, but it's going to be a mild recession next year, that we could only see up to 1 million job losses, and I say only in quotes, scattered across different parts of the economy, though the Fed will be really active when it comes to backing off to rates to avoid a recession here.
Well, I think that's an interesting discussion. At what point does the valuation story become interesting, make bargains open up when you still have this deteriorating backdrop? I think looking at the price action today, a lot of people would say not yet.
And there's the issue, though, of stability as well, right? It's not even whether we're in a recession or not. I think it's also the timing, the idea that if you have a little bit more certainty that it's arrived, then you can maybe start positioning for when that recession might end. And right now, I don't know. It's anybody's call. Is it the first quarter? Is it the fourth quarter? Does this carry over into 2024? Anyway, right here, still in 2022, last time I checked, counting you down to the closing bells, and we get them down about 340 points on the Dow Jones Industrial Average, about a % decline on the day. The S&P 500 lower by about 58 points or 1.4%, while the NASDAQ is going to lose about 225 points or 2% on the day. As for the Russell 2000, some of those small cap cyclicals, Carol, down 1.5% here today.
Yeah, and if we look at the S&P 500, you know, pretty much a broad-based sell-off here because you had about 401 names to the downside, 102 actually gaining some ground. And Katie, if I look at the S&P over those past 4 days, down almost 3.5%.
Yeah, it looks like there's some conviction in that downdraft we've seen in the S&P 500. But I want to bring everyone's attention right to the top of the screen because utilities, 0.7% higher. It was a little early an hour ago, but we are seeing a bid there because it's a very defensive day. You're seeing that filter through in the rest of the industry groups as well. A lot of red on the screen here. Right at the bottom, Carol, it's media and entertainment. A lot of that is just Meta.
Do you know how you said that? Let's bring everybody's attention. It's like you're a teacher in front of the room. I want to bring your attention to the whiteboard. All right. I want to bring your attention to some of the gainers in today's session, and it looks like they stuck, which I'm very happy about. We had a little bit of a deal flow today, and that meant Vivint Smart Home soaring in today's session, just finishing just below its takeout price. We're talking about Vivint Smart Home up 32% in today's session. NRG Energy agreeing to buy the smart home platform company for $12 per share in cash, and you can see the stock just closing just shy of that, $11.90 a share. Signet Jewelers, Romaine, you talked about this. You talked about Katie not horsing around, I think, and liking to buy jewelry or something like that. Signet Jewelers finishing just off its highs of the session, up 20% after the owner of K Jewelers and Sales reported fiscal third quarter earnings per share that trounced the average analyst estimate. I do want to point out, though, some analysts say that the updated outlook signals a weaker than expected fourth quarter, so stay tuned for that one. And then I do want to take a look at GitLab. Ticker is GTLB. It's a $6 billion market cap software company rallying a lot today, up as much as around 17%, finishing the day with about a 9.5% gain. The company raising its full-year revenue forecast, reported third quarter revenue that beat expectations. It's still down more than 50% this year, and about 12% of the float is shorted, but nonetheless, this is one of the names that actually gained in today's session, Tim.
All right, well, with 399 names lower in the S&P 500, I didn't have to look far to find some decliners. Let's start with Meta Platforms, among the worst performers on a points basis in the S&P 500. It took a hit today, down 6.8%. This follows a Wall Street Journal report about privacy regulators at the European Union saying that the company should not require users to agree to personalized ads based on their online activity. Think about how much of a challenge that Meta Platforms, Facebook, and Instagram has faced in the wake of privacy changes to Apple's iOS operating system. So this is just another indication that it could be even more difficult for them to attract advertisers, or at least target those users that those advertisers want to reach. And then Energy. Carol, you talked about...
Did you see that other story, Tim, though? I think Fortune was reporting about it, about what the Meta employees are allowed to talk about at work or not.
No, I did not see that story.
Yeah, they're expanding their rules for employees to dictate what is considered appropriate conversation at work. Basically, the issues they can no longer discuss: vaccine efficacy, abortion, pending legislation, elections, political movements, and weapon ownership.
Well, they're at work with each other, like talking to each other?
Yeah, at work. I guess they're saying
New
that this
community
is verboten.
engagement expectations, is that what they're calling it?
Yeah, so be
Once
nice.
you badge out, though, everything's
yeah, take it out to the parking lot. And
I'd like to dig into that.
Take it out to the metaverse.
Hey, let's talk about the smart home, though. Carol, you talked about Energy and Vivint Smart Homes. That deal, well, it looks like investors not so happy about it, at least from the Energy perspective. The power company having its worst day in more than a year. Shares falling more than 15%. You mentioned that executives there said it's buying Vivint smart home for $2.8 billion. That, of course, make smart thermostats, locks, lights, etc. Investors not loving the move, at least on energy's side. And then Paramount Global, an interesting commentary from Bob Bakish today, the company's CEO. Shares down 7%. We also saw other media companies move lower as a result. Bob Bakish said at an investor conference that he expects advertising in the fourth quarter to be, quote, a bit below third quarter levels. And according to our own Bloomberg Intelligence, Geeta Radnagathan, the comment suggests total advertising in the fourth quarter could drop as much as 30% compared to the same period in 2021. So that industry is certainly facing some serious headwinds.
All right, I wanted to take a look at what we did see in yields. While the decline in yields was modest, I think it was pretty significant, particularly with that 2-10s curve going deeper into inversion here, and a lot of activity that we saw, particularly with some of the big block trades that we saw in futures in the 5 and 10-year futures, as well as the activity that we saw on the long end of the curve. I think the read here is that you are seeing a bond market, guys, starting to price in a lot more of that recession risk. And of course, we talk about what we heard at that Goldman Sachs conference today, whether it was from David Solomon, or whether some of the commentary we got out of Brian Moynihan, or even some of the other executives out there who all seem to be saying that recession is, if not here, basically imminent, and that a lot of these companies need to prepare for it if they haven't already. And that seemed, I don't know why, but it seemed to rattle the market for some reason.
Yeah. Well, if you put that together, I mean, this kind of gets to what we were talking about an hour ago, this idea of talking oneself into a recession. Expectations form your reality. If you think we're heading into a recession, that's probably going to affect what you do in your daily life, the spending that you're doing as an individual, which obviously feeds into the whole economy.
Here's where I would argue that, let's watch the labor picture, right? If you think you are going to lose your job, if you think you're going to be out of work, and this is where if those numbers start to increasingly come undone, Tim, you mentioned our market guest who talked about, how many job losses will really determine how steep that recession is. But that's certainly a key indicator to get an idea if consumers then start to really rein in their spending and then things start to come undone.
It's hard for me to think about a recession in the context of the recent economic data that we've seen. I mean, we're beating when it comes to services. We're hotter than expected month after month when it comes to that jobs report. And I know some of this stuff is backward-looking, Romaine, but I'm wondering to what extent these banks, look, maybe talking their book, it's been a tough year for them.
Yeah, I mean,
and given that the economic data has kind of painted a picture.
Wait, did you say it's been
different.
a tough year for banks?
It has been a tough year for banks.
I'm sorry, I thought I heard record year for Goldman.
Well,
look at this. Look at the way their stocks.
Carol, I mean,
some of the other banks, the way their stocks have been punished
Carol,
this year.
Carol makes a good point, though, because that really is a dichotomy here. I mean, most of these banks, like I said, record profits, probably this year is going to go down as a great year, but it's not really even, right? And I guess how do these banks balance that? I mean, I'm looking at the Bloomberg Wire right now. We're getting news out of MasterCard, $9 billion share buyback program. They got $9 billion to get back? I guess they do. We actually heard from American Express a little bit earlier, the interview there. They talked about consumer spending trends that, at least in their mind, are still holding up. And did you see all the people? Yeah, Discover, and then you see all the people willing to pay up for that platinum card at Amex. I mean, doubling on that. So there are pockets of this economy that are going to do well, pockets that aren't going to do well.
The higher end.
Yeah, unfortunately, that's probably what it's going to look like. And the folks at the lower end, unfortunately, I hate to say this, are really going to feel the pain.
Division continues.
Yeah.
And I mean, how the Fed addresses that with its blunt tools, it can't actually differentiate between the higher earners, between the lower income tiers of the economy when it's raising rates. So it's just the unfortunate reality of the tools that, our monetary authorities are dealing with when they're trying to bring down that inflation.
Yeah, no, it's a good point. I don't know if you guys saw, too, on our Markets Live blog, they were making out the point that there's been a sharp decline in response rates for job surveys, suggesting in the case of payrolls, the labor market is weaker. We talked about this coming off the Friday's job report. If those data points are actually, if the labor market is a lot weaker than we're seeing, at least on some of the headline numbers, then maybe we're starting to see some trouble, Tim.
Of some of the companies that we just mentioned, I think Bank of America has the broadest view of the American consumer. And what did we hear from Brian Moynihan? The consumer still spending. That's important.
And just real quickly, too, I mean, we are going to get earnings out of Toll Brothers. I'm kind of later this afternoon. I am curious to see about the housing market reads as well.
And that's the high-end housing market when you think about Toll Brothers. All right, guys, that's a wrap. Our cross-platform coverage, Beyond the Bell on radio, TV, YouTube, and Bloomberg Quick Take, counting you down to the bell on this Tuesday. We will see you again, same time, same place, tomorrow.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Tuesday. Carol Master along with Tim Stenovic, our thanks to our TV colleagues. A somber conversation when it looks like what's coming maybe.
In the markets.
It feels that way, certainly, but interesting to see some buying in those last few minutes. All right, we do want to get to another most read story on the Bloomberg. Sam Bankman-Fried, we've talked about him a lot. We've talked about his FTX. The two of them may have crashed and burned, if you will. And yet the city, we're talking about Miami, the digital asset faithful, they are vowing to move forward and make and maybe keep Miami as the U.S. crypto capital. I guess they're almost like doubling down, it feels like.
Yeah, they really
are. Partying
are.
Down.
With more on her story, it is among the most read on the Bloomberg terminal. And it did what we call read spiking, which means a lot of people read it when it first comes out this morning. We got Bloomberg Wealth Team reporter Amanda Gordon right now with us here in the studio. Amanda, good to have you with us. You taking a break from going to parties to join us in the Bloomberg Interactive Brokers studio. Among the most recent parties that you went to was something with regard to crypto in Miami. Had a little bit of a different tone because it was in the wake of FTX, but that doesn't by any means mean that FTX was ignored. Explain what's up with all this FTX swag that was at the event.
You got it. Well, for one thing, why is something most read? It's because people feel a need to understand and process something that's going on that they know is relevant. And for the community of people who are in blockchain, who are, this is very new compared to, say, the Wall Street dinner that I went to last night in New York. Still partying in New York, too. But in any case, this is personal for them, what's happened. There are people who know Sam Bankman-Fried, who it's not just people whose balance sheets are affected by him.
There's an arena right there with FTX on it.
Exactly. So I think what I learned in my travels is that Miami was a great place this past week for people in this field to get together and process what it means to them and their community, and to sort of defend with fervor the optimism and excitement that they have for this actually being a really viable, important thing.
It sounds like, Amanda, so was it a wake or was it like a think tank where we have to double down after a crisis and figure it out?
Well, what do you do at a wake? You drink, right?
That's what I do. My family wakes.
I think it is that weird amalgam of, no one's like, flippantly ignoring what happened. And they understand the seriousness. And I know I sound serious for someone who, got to see Grimes perform under palm trees. But
it's hard to think
the
the world's falling apart
honestly,
under
it's like
the sun.
When I was talking about it with my co-writer, Felipe Marquez, who's our new Miami bureau chief, super fun to pal around Miami with him. I said it's laughing and crying that they're doing. So that said, what about the hype of Miami as a crypto hub? And I think one thing I learned is that it's a great place to gather and process, like any conference, right? Like I was at the Versace mansion talking to a producer for a Beyonce album who wants to do a record on the blockchain. And I was like, well, how'd you get into that? He's like, well, it's someone, an entrepreneur on the blockchain that I met at Davos. But it's like a part of a circuit, like with Milken and so on. And a lot of interesting people to meet and to follow that I met, that I documented.
Well, it's interesting because part of your story includes, documenting the establishment moves to Florida, and I find that interesting because you're throwing around terms like, Davos, Milken. These are where the establishment actually goes to connect with one another. So we're starting to see, certainly Miami being one of those places, and even crypto being one of those topics. Okay, speaking of cheerleaders, Francis Suarez. We've spoken to him before. You spoke to him for this piece. He is partying on when it comes to crypto. Still taking. He's the mayor of Miami. Still taking the his paychecks in Bitcoin. That's surprising to me.
He converts them into Bitcoin. Yes, he told me at Wynwood Walls when they were debuting some murals Monday night that this is a blip. And, look, he staked a lot of his tenure on this idea. And he's just an enthusiastic guy. I think that's kind of like what he brings to everything. But the funniest thing...
Also talking his book, he wants this to happen, right? This could be a good thing for his city. Or is a good thing, or has been.
If you look at the actual impact, I met, for example, the blockchain company that had the biggest presence at the art fair, the main fair itself, was Tezos. And the co-founders of Tezos told me that they would not think of locating their company in Miami. They're based in London. He said, well, for business and for talent, that's where you want to be, New York or London or Chicago. I heard that over and over. So just like with the art fair, great place to go and have fun thinking about art, maybe not the place to live full time and build a business.
What were the signs, though, of FTX? What did you see in that regard?
Well, that's the ironic thing is that how people personally process it led this one guy who's running a space in Wynwood to educate people about the blockchain. As soon as FTX declared bankruptcy, he took all these FTX T-shirts that they had gotten in their storeroom to give away to people who open up an FTX account, and he put them in the trash. Big trash bags. And honestly, I took a picture of it, and I've been looking at it all day, and I feel like this could have been an art installation at the fair, but it was a really visceral way of saying, like, this is something that we want to put behind us. And
for those watching on YouTube and Quick Take, we've got the shot of the garbage bags and the T-shirt.
It's such a 1990s look.
And then we're going to go back to Amanda, because you've got one of the T-shirts. You know, that's going to be a collector's item at some point. Do you know that?
Oh, I didn't even. That is cool.
That's the FTX T-shirt.
All right.
Good old palm trees.
That's amazing.
A collector's item there. So you also spoke to some CEOs who said, the environment has changed and it has become harder for us to raise money in the wake of this. I mean, we're talking about entrepreneurs who formerly were working at established companies as engineers, but are now starting their own companies and trying to raise money. So this has serious implications across the industry.
Absolutely. Some people see, or we're talking about the opportunities to get talent because they know there's so many people. There are people at FTX who are looking for jobs who were on the scene last week. But fundraising, hiring freezes is something that I heard from several people. And it's going to be a while before we're really able to move past this.
What struck you the most in doing this story?
I think that, people who want to go into a new unproven space, it's like the Wild West. And there's something that's very Wild West about all of Miami. For example, if you look at this art fair, it's become such a big thing, like a Davos or a Milken, but it's not like the museums or the art galleries are so established in Miami. So it's kind of like this, flash in the pan that happens.
Are you talking Art Basel?
Exactly.
Yeah.
If you look at the influence of art, what I think is exciting and what Vivasa reported on is the arrival of finance and whether that in a way, because they already have many more employees and are interconnected globally, that in a way has more potential to affect the economy of Miami. Less, tables rented at 11. Or a few, luxury condos not bought because a crypto person, has lost their fortune. That's not such of an impact. And I'll just leave with one thought, which is I talked to a guy who's worked in economic development for almost 20 years, and he's putting his bets on, and he had an event for climate tech as the next thing. So we'll see what happens with Miami.
That's fascinating. And listen, if anything knows about the impact of climate, it's certainly Miami and Florida in terms of the whole coast. So they understand the reality of it. Amanda Gordon, a great read, an incredible story, and thanks for showing us the T-shirt too.
It would make a really good gift to a colleague who, might be sort of like into reporting on the space.
What does Tim have up on eBay that's going for? Amanda Gordon, she's Wealth Team reporter at Bloomberg News. Check her out at Amanda Gordon on Twitter, and of course always at Bloomberg.com. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Fourth day of selling on Wall Street. Another down day for the S&P 500 index, dropping 57 points, now at 39.41. Today, the S&P was down 1.4%. A 1% drop for the Dow today, down 350 points. We closed off session lows, but still red on the screen. Lots of it. NASDAQ down 225, down 2%. NASDAQ 100 index also lower by 2%. A rout in tech giants like Apple and Microsoft weighing heavily on the market, but also there were those gloomy economic warnings from bank chiefs at a time when concerns about the impacts of Federal Reserve policy on growth and corporate earnings are running rampant. Morgan Stanley, meanwhile, is embarking on a fresh round of job cuts as rival banks sound caution that a looming U.S. recession will dampen hiring. Today, we've got Morgan Stanley shares down by about 2.5%. Again, recapping, stocks lower, S&P down 52, down 1.4%, 10-year yield 3.52%, spot gold up 0.2%, 17.71 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. Well, New York City office landlord SL Green and renowned chef Danielle Boulou just announced a partnership on 2 new food and beverage concepts at SL Green's newest office development, 1 Madison Avenue. It brings together retail, wellness, and dining. So we are so delighted to have back with us chef and restaurateur Danielle Boulou, owner of several restaurants in New York City alone. He's got restaurants around the world. He's at sea. He is just everywhere.
Danielle, good to have you with us this afternoon. How are you?
Thank you very much for having me, and I'm well. I'm here at Le Pavillon at 1 Vanderbilt in my office in New York.
It's not a bad place to have an office. If you're hungry, I know where you could go. Hey, we love talking to you for so many reasons, and we're going to get to today's news in a few minutes. But first, I just want to get an update since we last spoke about the restaurant industry, and certainly your restaurants, cater to a certain segment. But what are you seeing in terms of prices, in terms of labor, and really in terms of the economy when you look out across the landscape right now?
Well, of course, we're all conscious that there has been, of course, an increase in price of supply, an increase in price of cost of labor, but we are, gradually and carefully monitoring the business and, of course, making sure that we always stay on the fair side for all the decisions we make with price. And at the same time, never, ever go for lesser quality in order to cope with, maybe a better profitability. So on that side, we are very, very conscious that, any activity such as inflation like now, it's a challenge, but we are very careful with it. And hopefully it stopped there.
Well, I know we all have our fingers crossed, Danielle. When you were on with us last May, you said there was an incredible energy and excitement in New York City that hasn't been felt for years. We all felt it as people were coming back. And you said Manhattan continues to be active and that activity will grow as companies bring workers back to offices. Is it even better than May? And are you seeing signs that indeed people are back at work and they're doing either lunches or work dinners? You're seeing it
very much.
Okay.
We are very busy. I mean, Le Pavillon, for example, is open at lunch. We're in Midtown Manhattan, and we are very busy at lunch. But even in our amenity floor of 1 Vanderbilt, which have maybe an occupancy of 70% in the office right now, which 70% is a good number of people at the office. We can see that amenity floor packed at lunch. With people, so it's definitely is stable. It's finding its stability. Now I would say that the Thursday night, the old Friday night happy hours, let's go on weekend. We see sometimes that it's Thursday night more than Friday. So that means
Yeah, we see that in traffic too. Tim and I always talk about it. Mondays and
Yeah.
Fridays, it feel like
Friday's Eve is what they call it, after all, Carol.
exactly.
Yeah,
Friday, like coming in the city, there's like nobody around.
Hey, Danielle, I'm wondering about holiday parties and what you're seeing this month with regard to holiday parties. Are we back to 2019 levels? Are we still seeing a little pullback? What are companies doing in terms of spend right now? What's your take?
It's hard to say, but we definitely sit down with everyone who want to do a party, and we have restaurants like on the Upper West Side, that Bar Boulou and Boulou Sud, that offer a much more affordable option for private events, and we have a lot of party there. We see that offices and things also like to cater party in their own office as well as holiday party. And of course, in Danielle, and we have our classic, our regular customer that do their event and still carry on doing those events. But I think overall we are very happy with the way this year has been and how we're gonna close the year. But you know, next year we're gonna roll with a punch if we have to roll with a punch.
Well, does that mean recession? We've just spent the whole day, and we want to talk about, you know, your partnership and deal that you're doing or working together with SL Green. But we just heard from the big bank CEOs, the David Solomons of Goldman and others, you know, Brian Moynihan of Bank of America, and they all seem to be a negative tone in terms of what to expect in 2023. Any signs, Danielle, that things are slowing down and that we maybe all are going to rein it in a little bit?
No, not now. And I think when, of course, we're going to see in New York City, we have the tourism, we have the business, we have definitely New York City has a lot of rebounds, I will say, all the time for different purpose and different reason. But we are preparing, we are careful, and we are looking to, you know, of course, being accommodating and creative if we see that there is a little bit of a squeeze. But I think company will still have to entertain, company will still have to do business. I mean, JP Morgan is building a 100-floor tower next door here, and they are full throttle on the building, and they are hoping to fill up that building with people. So I think I see the optimism maybe, you know, not only for next year, it's hard to be optimistic, but definitely for the next 5 years, I think there'll be, you know, maybe a turn now, and then we should see the straight line.
Danielle, you use the term creative, and I think that's a good way to describe the new concepts at SL Green's newest office development, 1 Madison Avenue. It brings together retail, wellness, and dining. Given the landscape that you just described to us and the news that you just announced this month along with SL Green, how did that go into planning these 2 new concepts?
Well, 1 Madison is in full, not only renovation of that corner of 23rd Street between Madison Avenue and Park Avenue, but is also building a tower above. And they have many high-quality amenities for their tenant there. And they also, we're gonna also create together a market that where, you know, there'll be counter dining, which counter dining is affordable, is delicious, is fresh, is 2 orders, but it is very much for a balance between, you know, fine quality ingredient done very simply. And we also, people can either eat in or they can buy and to go, take the to-go food, or they can also buy food and make it at home. And I think with this option of offering in that neighborhood, I think it's going to be very welcome. And it's going to certainly, something like that can go through the high and low of the economy much better maybe than trying to build a 4-star restaurant.
I love this, Danielle. It sounds like strategy, right? You guys are thinking about maybe, you know, where's another part of the market you can go after? And it sounds like, as you said, maybe this is somewhat economic resilient. Is that was a big part of the push?
very much, and also an opportunity in this neighborhood. 23rd Street is really where business, midtown business meet downtown social. And I think the entire Flatiron district, it's I think a great district to be in, where you really want the locals to be able to come, and you want the business to entertain, and really bring also the tourists in New York, keep bringing tourists, giving them reason to come to New York and see us.
All right, we're going to have to leave it at that. So always a treasure when we get some time with you, Danielle. Good luck with everything, and we look forward to maybe checking in real soon once again. So good luck with everything. Chef and restaurateur Danielle Ballou, of course, you know his name and his restaurants.
Bloomberg Business Week is brought to you by the Donors Fund. Open your free giving account in minutes and instantly qualify for a tax deduction. Then choose from 1.4 million charitable organizations at any time. Visit thedonorsfund.org today and get your 2022 tax deduction.
All right, coming up on Bloomberg Business Week with Tim and myself, I do feel like there's been a negative tone over many of the conversations today, although some optimism, although cautious optimism, right? When we heard from Danielle Ballou even about kind of the economic outlook, although he's pretty busy, but Jim Rickards, he's got a new book out talking about broken supply chains, surging inflation, political instability, and the impact on the global economy. We're going to check in with him in just a moment. You're listening and watching Bloomberg Radio.
Let's get to world and national news. Nancy Lyons is in our D.C. newsroom. Hey, Nance.
Thanks, Tim. The verdict is in. The Trump Organization has been found guilty on all 5 counts it was facing, including engaging in tax fraud for more than 10 years. Some of the fraud that was committed included evading taxes on company-paid perks like free apartments and luxury cars. Former President Trump was not charged. Georgia voters today are deciding the country's final Senate contest, choosing between Democratic Senator Raphael Warnock and Republican football legend Herschel Walker after a 4-week runoff blitz. Bloomberg Washington correspondent Joe Matthew is in Georgia and outlines what's at stake here.
If Raphael Warnock keeps his job, Democrats control the committees in the Senate. That means judges. That means nominees, having control over the agenda and the bills that go to the floor. If Herschel Walker wins, Democrats already know that world because they've been living in it for the last 2 years.
Bloomberg's Washington correspondent Joe Matthew. The House committee investigating the January 6th attack on the Capitol will present the Justice Department with evidence that specific people, possibly including former President Trump, committed federal crimes in trying to overturn the results of the 2020 election. Chairman Benny Thompson told reporters the panel is still working out the details. He would not say who could face charges. Top House and Senate leaders have bestowed Congress's highest honor on law enforcement officers who defended the U.S. Capitol on January 6th. House Speaker Nancy Pelosi presented each one of them with the Congressional Gold Medal.
Staring down deadly violence and despicable bigotry, our law enforcement officers bravely stood in the breach, ensuring that democracy survived on that dark day.
Pelosi speaking in the Capitol Rotunda, which was overrun that day. At the World Cup, Spain was shocked by Morocco and has been eliminated. Portugal had no trouble defeating Switzerland. Global News, 24 hours a day on air and on Bloomberg Quick Take.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 4 losing days in a row for the S&P 500 index. The S&P today down another 57, drop there of 1.4%. The Dow down 350, a decline of 1%. NASDAQ down 225, a drop there of 2%. 10-year yield 3.52%. Spot gold 1771 the ounce, up 0.1%. West Texas Intermediate crude down 3.3%, 74.40 for a barrel of WTI. Stocks slumped amid gloomy economic warnings from bank chiefs at a time when concerns about the impacts of Federal Reserve policy on growth and corporate earnings are running rampant. Goldman Sachs Group's David Solomon is warning about pay and job cuts amid an uncertain outlook, saying you have to assume that we have some bumpy times ahead. Speaking on Bloomberg Television, also today, we actually had J.P. Morgan Chase interviewed on CNBC, I might add. Goldman Sachs' David Solomon interviewed on Bloomberg Television Radio. But Diamond said a mild to hard recession may hit next year. And Bank of America CEO Brian Moynihan says his bank is seeing signs of consumer weakness. Today, Goldman was down 2.3%. J.P. Morgan Chase up 0.1%. Bank of America down by 4.3%. Again, a losing day on Wall Street with the Dow, the S&P, NASDAQ all declining. Sad day for airplane enthusiasts around the world. Boeing rolling out the final 747 jumbo jet late today from its factory in Everett, Washington, ending production of the aircraft after more than 50 years. This one is a freighter, not a passenger jet. Boeing says the last model is going to be delivered to customer Atlas Air. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, when was the last time you went on a 747?
I can tell you exactly when it was, roughly 6 years ago. That's not exact, but 6 years ago. I cashed in a whole bunch of miles. Why? Because at that point, the 747, we knew it was going to be ending commercial service. Where did I fly? An interesting flight all the way from London over to Phoenix, Arizona. British Airways was serving that route. Managed to fly with my son. Managed to fly in the upper deck, which is why I cashed in all those miles.
I knew you would have a great 747.
You know, exactly. And I mean, this is an aircraft that is in my heart. Part of the reason is, listeners may not know this, but I am originally from the United Kingdom. Gone is the accent. However, the first launch customer, Pan American. Pan American, where do they fly? Where do they make money on this? From London into JFK. That's where they first deployed the 747s. And yes, I was on those very first planes.
Iconic.
That's really cool stuff.
All right, Charlie, really, really good stuff. All right, we want to get to our next guest, who is known for his views on lots of things, including the dollar and the coming collapse of such. He's a lawyer. He's been a banker. With us is James Rickards. He's editor of his monthly newsletter, Strategic Intelligence. His new book, Sold Out: How Broken Supply Chains, Surging Inflation, and Political Instability Will Sink the Global Economy. He joins us via Zoom in Portsmouth, New Hampshire. Jim, nice to have you here with Tim and myself. Gosh, I'm not even quite sure where to start, but I do feel like your book gets to some of the structural, fundamental changes that are going on in our global economy that will result in some of the trends that we're seeing today that we think we're going to get our way out of, that they're actually going to stay with us for longer. So talk to us about your book.
Yeah, that's a good description, Caroline. I make the point, I start in the introduction, that supply chains have always been around. They always will be around. I talked about there was a Bronze Age shipwreck from 1200 BC that was discovered off the coast of Turkey in a place called Uluburun. Some diver found a funny-looking pot, and he reported it. Well, it turned out to be the greatest Bronze Age treasure ever found. But in that wreck, they found amber, which was from the Baltic Sea area. They found gold, which was at the time from Sudan, not far from the equator. They found weapons made in kind of present-day Damascus, Syria area, and olives and other foodstuffs from Italy and Spain. So if you take those goods and kind of draw it on a map, it covered an area of 5 million square miles, which is a huge supply chain, all on a single vessel. So they've been around forever. But what was new is that beginning in 1989, with the fall of the Berlin Wall, 1991, the fall of the Soviet Union, 1992, Deng Xiaoping's Southern Tour really brought China into the global economy, applied mathematics, greater computer power. What was new was supply chain science. And that's been used ever since for over 30 years to make the supply chains more and more efficient. But the problem is Along with those, and they saved costs. They did reduce costs, higher margins for participants, lower costs for consumers. But there was a hidden cost, which is they were extremely fragile. When you take your supply chain from Chongqing to New York, 9,000 miles, there are a lot of things that can go wrong along the way, and they have. So
a lot of touch points, right? And you think about coming off of COVID, right? The whole goal was like to decrease touch points. We saw it in the airline industry, you name it. And as you said, lots of, fragility, if you will. Fast forward though to kind of where we are today.
Well, I hate to overuse metaphors, but there's a good one here, which is if you have a really nice vase and someone knocks it over and it breaks into 5,000 pieces, you can't put it back together. You've got to go get a new vase. So 1989 to 2019, I call that supply chain 1.0. That's what we've been talking about. Going forward, there's going to be supply chain 2.0, but it's going to be different than the other old supply chain. And the key thing is people are going to still trade with each other. They're going to outsource. But there'll be what I call a college of nations, like-minded, more democratic, more liberal, more rule of law societies, obviously United States, Canada, Australia, Japan, Western Europe, and others. They'll trade with each other, but China will be out of the club. China may form its own club with some ASEAN members, Southeast Asian countries, and so
Can we
forth.
afford for China to be out of the club? I mean, we rely on China for so much. I mean, look at how closely Apple is bound to China, for example.
Sure. Well, this won't happen overnight. What I'm talking about is going to happen over 5 years. I talked to the guy who was like the #1 guy who actually built the supply chain. Of course, there were millions of people involved. This is the single guy most responsible for doing this. And they said, Jim, you have to understand, it took us 30 years to do this. We blew it up in about 3 years. It's not going to come back overnight. It's going to take 5 or 10 years or longer to build this new supply chain. But yeah, we're decoupling from China as fast as we can, but they're decoupling from us.
Jim, you write in your book, and it's great. You actually take us to Ernest Hemingway in The Sun Also Rises. And you talk about the war veteran Bill Campbell asking the constantly drunk Mike Campbell how he went bankrupt. Mike replies, 2 ways, gradually, then suddenly. Supply chains break down the same way, gradually at first, climaxed by a sudden catastrophic collapse. Have we seen that collapse thanks to the pandemic?
Yes, we have. No, look, the pandemic was a big part of it, no doubt. And the war in Ukraine is a big part of it. But I was actually able to identify the beginning of this breakdown. And it goes back to 2018 when Trump put tariffs on China. Now, I don't want to debate tariffs. I happen to think they were a good idea, but we don't have to get in that policy debate. That act itself blew up the supply chain. And, China was buying soybeans from the United States to kind of balance the balance of trade between the two countries. The second biggest producer is Brazil. China shifted all their soybean orders to Brazil.
Right.
Well, that's not a phone call. You got to scramble infrastructure, port infrastructure, trucks, farmers, everything else, cargo vessels, et cetera. And then the U.S. soybean farmers said, well, we'll sell ours to the Netherlands. Well, that's just one example, but it's a very big deal. And those aren't 30-day or 60-day deals. Those are 5-year deals.
Jim, we've just got about a minute or so left here. Your book, How Broken Supply Chains, Surging Inflation, and Political Instability Will Sink the Global Economy. So where does this take us, and what's the time frame?
Well, it's happening now. A good example, Taiwan Semiconductor Manufacturing. They've announced 2 separate $10 billion investments in semiconductor fabs, fabrication plants, what they call fabs, in Arizona. Intel is doing another one, $10 billion plus in Oregon. Now, Intel could build in China, so could Taiwan Semiconductor, but they're coming to the United States, which is a big user of semiconductors. Is an example, Janet Yellen calls it friendshoring, Emmanuel Macron calls it the constellation of nations. I use the phrase college of nations, but the idea is they'll be in the club. And that's because if China invades Taiwan, the United States has the broken nest theory militarily. We're going to destroy Taiwan semiconductor facilities in Taiwan because we don't want the Chinese to get them. TSMC knows that, so they're building in Arizona.
Yeah, there was another story too, I think, on TSMC today. Tim Cook, Biden helping TSMC unveil that $40 billion U.S. Chip plan, and that's exactly what you're talking about, Jim. So this is something that's aggressively moving forward. We scratched the surface, but I think such an important topic, and maybe we can get you back real soon. Jim Rickards, editor of Strategic Intelligence Newsletter, his new book, Sold Out, How Broken Supply Chains, Surging Inflation, and Political Instability Will Sink the Global Economy. Tim, these are these big macro factors that we've been talking about increasingly over the last couple of years, and the impact it will have on the global economy. Important on a day when we saw our Bloomberg economics team weigh in and bring down estimates for 2023 globally. This is Bloomberg.
I'm Charlie Pellet at Bloomberg World Headquarters. Now a roundup of the day's top business stories. Sources tell Bloomberg Apple is scaling back ambitious self-driving plans for its future electric vehicle, and it is postponing the car's target date by about a year to 2026. Again, according to sources reporting from our Mark Gurman, Apple down today by 2.5%. Mirati Therapeutics shares fell the most in 6 months as results of studies combining its experimental lung cancer drug with Merck's top-selling immunotherapy disappointed investors. Today, shares of Mirati lower by 22.9%. Wells Fargo CEO Charlie Scharf says the bank is working to find the right balance of how much to raise the rates it's paying depositors while protecting the firm's profitability. The lender sees increasing rates on deposits more as a tool to retain so-called franchise customers than a way to attract new clients. Scharf's comments came at the Goldman Sachs U.S. Financial Services Conference in New York. Wells Fargo shares today lower by 0.6%. American Express says the number of platinum cardholders in its portfolio doubled in recent years, even as it pushed the annual fee to $695 from $450. CEO Steve Squeri says the company will continue to revamp the card's perks and adjust that fee accordingly. AXP, American Express, down today by 0.9%. Down day on Wall Street, the Dow, the S&P, NASDAQ all lower, S&P down for a fourth day. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, we've got more Business Week to come here with Carol Masser and Tim Stenovic. In the meantime, let's get an update on world and national news. For that, it's off to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. A jury says the Trump Organization is guilty on all counts in its New York tax fraud trial. Prosecutors accuse the former president's company of avoiding taxes by paying personal expenses for top executives and giving them compensation without reporting it over a period of 15 years. Donald Trump himself is not charged, and he has called the trial politically motivated. Well, Congress has 3 weeks to agree on a budget total or else pass a resolution continuing government spending until the next Congress meets.
Democratic leader Hakeem Jeffries pointed to the authorization for modernizing defense if spending is put on hold.
And that would undermine our ability to fully fund our domestic priorities, as well as make sure that we have the strongest possible robust defense, given the threat to our safety and well-being and those of our allies, including in Ukraine, across the world.
Jeffries said his Democrats are united while Republicans squabble.
I think on our side of the aisle, it's all wine and roses right now. It's puppies and rainbows.
So it's difficult, Jeffries suggested, to find common ground with Republicans at the moment. In Washington, Irv Chapman, Bloomberg Radio.
The power is still out for thousands in Moore County, North Carolina, after 2 power substations were hit by gunfire over the weekend and knocked offline. These residents are feeling frustrated.
My house, there's no power, no service, so all the food in my fridge has gone bad.
It's bad. What happened? Bad.
Duke Energy says it hopes to have most of the power back on by Thursday. Authorities are still seeking those responsible for that attack. In Colorado Springs, the suspect in a deadly shooting at a gay bar was formally charged today with hate crimes as well as murder. 5 people were killed, 17 others were wounded in that attack. At the World Cup today, Morocco stunned Spain, winning after penalty kicks. Portugal had an easy time, though, defeating Switzerland. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Back to you, Carol and Tim.
All right, Nance, thank you so much. Nancy Lyons with World and National News there in our 99.1 newsroom in Washington, D.C. Carol Masser along with Tim Stenovic. Doug Krisner. The party hasn't started yet for you.
Doug Krisner is eager.
Daybreak Asia is coming
Daybreak
up
Asia.
in about an hour, but we have some important things to still
Doug
do.
is so early
Slow
to the
your roll,
studio.
Doug. Slow your roll. We love Doug Krisner. And in an hour, it'll be really important to find out what's going on with Asia. But right now, we want to kind of wrap up our day. We had another down day for stocks. The S&P 500, down 4 days in a row here.
That's right. Taking a look at how things closed today, the S&P shedding 1.44%, falling to 39.41. The NASDAQ finishing at 11.014, down 2%, and the Dow Jones Industrial Average falling a full percentage.
And Doug, if you really think it's that bad, Doug Krisner's just watching over us. You could see him over Tim's shoulder. Doug is like our little guardian angel. Hi, Doug. Hi, Doug. On YouTube and Quick Take, you can see him.
We're having a great show.
Doug,
We're still having a great show.
You think you're having a bad day. Millions of U.S. millennials moved in with their parents this year.
Soaring rents forced millions of young Americans to move back in with their parents. That's according to a new survey.